Okay, and we are live. Roy, how's it going?
Swell, yeah. Here on Siesta Saturday, so it's our FinTech Friday, or not FinTech Friday. We renamed it a number of times, but yeah, it's our Friday show here on Saturday. So we have a couple of topics we want to hit on hand. As always, we're going to be heavy on the Q&A side as well. But today we're going to talk about SoFi quite a bit. There's been a couple of interviews, one fireside chat that was really interesting, and of course, if you haven't watched Steve and Amit's interview with Anthony Noto. If you're a SoFi investor, you're interested, well worth your time. We're going to talk about that too. NVDA had earnings, SPACEX, and a number of IPOs as well are very interesting. And we're going to hit a few other topics as well. Tevis, how are you?
I'm doing good, man. No complaints.
And
Uh,
if you guys are wondering, his not his normal background. He is serving, I think, as the quant for like some major government or something, or maybe the entire world. And I don't know. Like with Tevis, he's always traveling. So, but I'm glad that when I have something come up and I'm not able to make it on a normal time, you're always flexible. So I try to do the same. But excited to be here today. What do you want to hit first? Anything that popped out to you this week?
um, no, man, I'm here. I'm ready for the full 2 hours with the Q&A and everything. And we'll touch on the SoFi interview because I think that's going to be a good one. No preference in terms of order of events. Just happy to be here. Yeah, blue is the thing. I don't know how we always are matching, but we have this like weird telepathy.
Yeah, the reason why I'm wearing blue is because it was on top. And on the weekends, I just like, hey, it's on top. Great. Um, but yeah, before we jump into some of our main topics, last Friday we talked about CoreWeave and we were talking about option strategies. We were talking about what's happening, of course, in the inference space. We talked about Nebius. You and I are both shareholders. You know a lot more than I do, and congrats on that, by the way, buddy. But we were looking at CoreWeave. I think we've also looked at IRA, and there's some smaller names as well. And I mentioned, I was like, hey, I might start writing cash ticker puts. Now, the premiums are not nearly as good as the other two names that we mentioned, just because it's not as volatile. But looking at it, I'm like, man, it's undervalued. It looks like an opportunity here. So I ended up not actually writing any puts. I just bought some shares. I was like, you know what? Let me just go and buy a small starter position. It's 100 shares. I mean, it's not going to be like my portfolio is not so big that I'm talking about like tens of thousands of shares, but I think that I might write some puts depending on how we open up on Tuesday because the market's closed. And I like Nebius better. Long term is a higher quality. NeoCloud is awesome. There is some debt considerations that people push back on CoreWeave, but I asked, so I'm like, is there something I'm missing beyond like the debt? Why people don't like this name? And I'm just not seeing it. For whatever reason, the market hasn't given it its attention. It's not always right to pivot from a leader, which I think Nebius really is. And I think like 5 years out, that's when the NeoCloud becomes really compelling, more so than the bare metal, what CoreWeave does. So this isn't like a long-term hold for me. It's a swing opportunity. What are your thoughts on that? And are you interested in possibly taking some of that Nebius money to go into CoreWeave?
Um, that's a good question. Look, I think you can make an argument in both directions. On one side, you can argue that Nebius and CoreWeave should not be at the same valuation. But on the other side, you could argue that, well, Nebius just has a fundamentally better setup, right? Because of the ability for them to grow through prepayments and not take on $35 billion worth of debt, right? Um, at the end of the day, like, if I think about who is the bag holder, if something happens to demand, well, it's like, all right, well, Nebius has already collected a prepayment there versus CoreWeave is spending the money up front to build it. And if in fact the counterparty is the risky side, CoreWeave is going to be left holding the bag. Now, that's not a consideration right now because nobody is arguing that demand for inference or AI is going to fall off a cliff at all. It's just a fundamentally different model. And I think it's more risky, but obviously there's more upside, right? Because if you build with debt, then you would presumably keep more, like have a better contract at the end of the day because you don't have to make concessions to get prepayments. So, look, the reason why I'm not selling Nebius to go into CoreWeave is because, I mean, I could for a small amount, but fundamentally you're betting on the same thing. The same thesis is, what's going to drive both of them higher in unison. And when one falls, the other is going to fall. When one rises, the other is going to do the same. So if I'm already having, let's say, the best horse in the race, us both, right? Because we're both Nebius investors. The only reason I would diversify into CoreWeave is evaluation. Maybe that's a strong enough compelling factor. It might be for a small position, but nothing that's really, attracting me, because at the end of the day, like I think about this all the time, like how concentrated do I want my exposure to be to the AI trade? And if it's in the AI trade, do I want it through data centers or do I want some memory names, right? Do I want some photonics? Do I want some of this other parts of the stack so I can have exposure across the board? I mean, you have air, I have a little bit of air, so that's a different part of the stack. But if I look at all of these players, and I can show you the infographic that I shared, like there's a lot of different names across the stack. Ideally, I want to pick up the best name in every layer and just be invested in those. So I don't want to diversify inside a layer. I just want to diversify across different layers, if that makes sense.
Yeah, absolutely. And there's a lot of this is something on Artemis that is kind of cool. You can go in and look and see what the different names are that they have these space, but they talk about these themes, and like this is in the same theme, the AI networking and data centers. A lot of other names there too, but I mean it's up 90% year over year. Memory and storage up 142%. Of course, Micron's there, and I do see your question, SM, CoreWeave or Micron at these prices. I went CoreWeave. I don't think either is bad. Like all of them are up here in this space. Of course, even Bitcoin miners, a lot of these are making the pivot into the data centers, which is why it's up so substantially. But all of those have been great themes. And then some of the themes that we'll talk about too today related to SoFi, like fintech infrastructure is down 21%. If you want to call it, something a little bit different, wherever it's at, like e-commerce, it's down 18%. Consumer finance and lending, which is more SoFi, 18.5%. It's been kind of tough if this has been the huge part of your portfolio and you've not had this. So thankfully, I concentrated pretty much every single one of my buys late last year and early this year in these spaces. So my portfolio looks a lot better than it would otherwise. But so like, I think it's usually a mistake to pivot from just like full pivot away from things that have like gone up a lot to things that have not performed very well. But I do think that there is an argument to like within a specific space to go from some of these that went from deeply ridiculously undervalued to overvalued. I would say ahead of itself more than overvalued. Like it's hard for me to look at Nebius and like the opportunity there and call it overvalued. Not cheap, maybe. But CoreWeave like is just in the space. If you want one of those larger names, they have like it's either 92 or 98 billion. Somebody's gonna call me out for getting it wrong. And backlog. So it's a huge amount of backlog as well. You could look at oracles and things like that too. But yeah, it's a swing opportunity. I think that Nebius is a little bit ahead of itself. Obviously, I'm more excited about that name. I'm not trying to play it too cute and be like, okay, I'm selling one, getting the other. Just reality is I got some funds that freed up, part of that from covered calls that are underwater for Nebius. And so I'm going that way. But yeah, like in this space, like you said, I think that as long as this is the direction that the market is very interested in and there's demand that's driving this, and there absolutely is, it's insane demand, all I think are going to do pretty well. It's just a question of what's going to do best from here.
Yeah, and that's totally fair. I don't know, man. Like I think all the time that I need more exposure to AI, but then the other side of me is like, oh well, is that symbolic of where we are in the market cycle? Are you speaking a little bit from emotions? Because you're seeing all of these names run up, and like I think Nebius, I did the modeling, Roy, on Nebius, and like my cheapest price target came out to 350. Like that's if we take the low end of their ARR target and we apply a conservative, I mean, relative to their peers, we don't apply any premium in the multiple. 12 months out, that comes out to 350. Now, if you're taking the mid range of their target, and if you're assuming they're going to raise their target, Well, all of a sudden you get to a price that's over 400 and even over 500 12 months out. I think that, there is recency bias. Like people are like, oh, it's gotten ahead of itself. And same with Micron, and same with, all of these other companies in that space. But the reality is like we don't know where the bottom of the pool is, right? Like we're still diving, and we don't know what the size of the addressable market is and what the appetite truly is from a demand perspective, and can that be serviced. Like Nebius is saying, well, forget about 26. We're already taking orders. We're already filling up our 27 backlog, right? And
Yeah.
so that is exciting, right? Because they have visibility and they have pricing power and they have this leverage on 27. And that accounts for all the extra data centers that they're going to have live. It accounts for the capacity, the connected capacity. And so all signs point to the fact that, hey, in fact, demand is very robust, and it gives Nebius optionality on pricing power. It gives them optionality on the delivery and the build out and the investments that they're making. So all that to say is like, a part of me is saying, oh, this is FOMO because you're chasing. And then the other part of me is saying, actually, it's not, because like this is going to get much bigger before it gets smaller.
Yeah, it like one of those data points that came out. This is just one of like a whole bunch of charts. Is Google is talking about the monthly tokens it's processed just on their ecosystem, and note that this is a different letter.
Yeah, quadrillion.
You'd be like 3.2 seems no. We're talking about units of measure that is hard for the human mind to comprehend, and this is a logarithmic scale. This is not. It's just like mind blowing. And a year ago we were talking about how behind the understanding was on the opportunity that was in this space, and I still think it's that way. Although the market understands it more, there's obviously a big gold rush related to building data centers, and everything connects back to that. So I do see some questions on like if this is a bubble or not. If you look at valuation, if you look at the growth and everything, I don't really think so. I do think that there's a bubble in private equity specifically, and we're going to talk about that as in relation to SPACEX. Before we do, any other thoughts on the space, or we can talk? I'll give you your choice: SPACEX or SoFi next, because we're going to hit both.
Let's do SpaceX next, and let's save SoFi for later on in the show.
Yeah, we'll do SoFi, I think, right after that then. So SpaceX got interesting because there's some overlap with what's happening, of course. We got it all in the title, guys. Don't worry, we'll get to it. SpaceX, of course, is IPOing. It's one of several huge IPOs. And the valuations of these, of course, we've talked about it already. They're looking at $2 trillion. Now, what's really interesting, I'm sure that you saw this news, is what Elon is in building through SpaceX, that they have a lot more capacity than what they're able to need. There's a lot of reasons for that. But Anthropic all of a sudden comes out and says, we can use that. And their operating budget, I need to find it here because I know we chatted it back and forth. All of a sudden dramatically increased from SpaceX being not a significant amount of revenue. Of course, they don't make money yet. They have a net loss, it looks like, in first quarter of 4.69 billion. Or net loss is 4.28 billion, and revenue is 4.69 billion. So we go from yeah. So we go from 4.69 billion. Anthropic is paying them 1.25 billion monthly, not quarterly. So it's like, okay, that's double their revenue right there. So it's still going to IPO at a ridiculous price, just like ridiculous IPOs. Just be careful with them. Like if you buy them and you hold them super long term, if they're a compelling business, of course you'll be fine. Everything when it's IPOs, it usually comes out as pretty overvalued. SpaceX, when it's like a top of mind type of business and stock, especially with Elon involved, it certainly is as well. But is this more compelling to you now, all of a sudden, that they basically doubled their revenue overnight?
Do you want to hear my thoughts on this? Because I posted about this is my thoughts. I said, for the amount of crap that Elon gives Anthropic, you'd think he'd be a little bit more appreciative considering how big of a chunk that they're doing in revenue. Because that guy talks the most smack around his competitors, let's say, Anthropic, OpenAI, and others. And yet, all of a sudden, now you have a vested interest to see Anthropic succeed because they're paying you all of this money. You're a service provider to them. I don't necessarily think it's going to do anything to the valuation. I mean, who knows, man? I feel old because I feel like, that meme of throwing the Intelligent Investor book in the trash. Like, SpaceX was already at a $2 trillion valuation before Anthropic was paying them this. Does an extra, what, $12 billion, $14 billion or whatever in revenue per year change that math? Absolutely not. It's still incredibly overvalued. It's like, what, they're doing $15 billion a year and they're at $2 trillion, like 200x um, price to sales. Like, it's going to be insanely expensive. But the other side, you could argue that, well, from a perception point of view, it's so much bigger that Anthropic's working with them, and that can even pump the stock like another 400 billion, $500 billion. So I'm like,
Oh yeah.
it's all gravy at the end of the day. If that's the thing you believe in, I'm just not going to touch it. At least several months after IPO, and maybe reassess it there.
Yeah, and the reality is, like all the space names, I see some people talking about Rocket Lab, also a good company. They're going to be unprofitable for a long time. It's the nature of the business that they're in. Now, does that mean that they're going to zero? Absolutely not. I think space is only going to heat up over time.
Yeah.
Jared Isaacman at the helm of NASA, I think, is incredibly bullish for these companies as well, because it leads to a lot more focus on space. Even Jeff Bezos said in his interview when he was asked about data centers in space, he said near term, if you're talking about like within the next 5 years, probably not going to happen. Or I think he said 2 or 3 years. 5 years out, it becomes more compelling. Of course, SpaceX, Rocket Lab, and so forth. As that infrastructure is built out, they're going to be a big part of that too. So yeah, I'm like you. I'll watch it from the sidelines, like IPO access type of stuff. Like if I'm like, hey, get a couple of shares just for fun. Yes, but like no meaningful real position here. Usually I'll wait 6 to 12 months to get into an IPO. And would I love to own SpaceX at some point? Yeah, but just not here. So
Well, let me ask about that. Did we change the timestamp, by the way? Yeah, we did. Let me ask about that. I think Amit was one who most recently got into the space race by buying ASTS. I think he posted about that a couple of days ago. We know Matt Money is like a gazillion. Actually, did you see the meme about Matt Money? Oh man, this
No.
is let me throw this up. We know he's big into Rocket Lab, and okay, so let me show you this first before asking my question. So somebody posted this on X, and it was like the funniest thing ever. News: Texas man that buys entire Lamborghini inventory in Dallas as Rocket Lab hits all-time high. Has anybody seen this man before?
That's the White House quant.
That's the White House quant, baby. And it's like Matt here on Dallas local news. So yeah, and also Matt in the background. the man is it's life-changing money. So the point is like, okay, we're interested in SpaceX. We don't love the valuation about SpaceX. What about ASTS? What about Rocket Lab? What about, any of these other companies that are dabbling into that same space?
I mean, like, I think if you're a long-term investor, DCAing into them is probably right. I missed it. Like we talked about it previously and why and everything. I'm not going to reiterate that. So yeah, but like if it goes down lower at some point, and I think that they will. Like these names are very volatile. I wouldn't be buying heavily personally in these names right now. They've really heated up, and not because there's been any fundamental shift. I think it's just because of excitement about the SpaceX IPO, and that's fun if you're a shareholder. If you're looking to buy and get in, it's usually not the best time when it's not any necessarily fundamental shift. It's just market accumulation.
Yeah. Well, so that's interesting to me, right? Like I'm trying to get to the bottom of, are you wanting exposure to space at these valuations, or SpaceX as a brand name at, once it cools down a little bit? Like just trying to dig into the statement that you made of like, oh, SpaceX is interesting, but not right now.
So I think it's going to have the Elon premium, and you have to accept that as a buyer, like at any level. It's not just with the IPO. Like let me actually share this just so we can see the size of this and try to wrap our heads around. Now this can change, and not all of these will necessarily IPO, but I do want to talk about this too. and there is some relation to SoFi and other names that are in the space. But okay, so SpaceX obviously 2 trillion valuation potentially, I would say, rather than necessarily expected. But I mean, given the Anthropic news, it wouldn't surprise me at all if it's even north of that. OpenAI 1 trillion. Anthropic is actually, I don't know where Cole got this, but that's a little bit behind. It's right around the $1 trillion mark. I think 800 billion is the last that I saw. Databricks is probably going to IPO higher than that. Stripe, I don't think that they're going to IPO this year. I don't know that they're going to IPO like anytime soon. But there will be some of these other names as well. And these are not small. Like the craziest thing is, like, we were talking about an environment where just a couple of years ago, having a trillion valuation puts you in the top 10 of all businesses in the world. And now there are potentially 3 businesses that might IPO in the same year. And all of a sudden, I don't know, like it's kind of crazy. And I'd love to own 2 out of the 3 of these.
And look at number 4, my baby in the list, Databricks, baby. Because once that bad boy IPOs and gets a pump, ClickHouse is going to raise more money, and we're going to be laughing as Nebius investors, you and I.
Yeah,
Think about it.
absolutely. So yeah, like it's really exciting. Now, just to do a little bit of a pivot to away from pure SpaceX and IPO, a couple of things real quick, and I want to talk about implications and also SoFi as well. So number of IPOs per year is important. It's not like the most important thing, because again, if you're looking at one SpaceX versus like 100 other like little tiny IPOs, it's a big difference. So far this year, we're at 150. We're on track to exceed what was in 2025. 2024 numbers are just going to be blown right past. It's going to be a long time, I think, before we see a 2021. I was kind of thinking we might by now, but what's really interesting too is when you have this type of environment where you have a lot of IPOs, the quality of the IPOs is very high. We can look at a name like Robinhood just to see the impact on anything that touches brokerages. So let me go ahead and pull up the Q1, and I had this ready a minute ago and then I clicked off of it. So it's like page, let me see. It's stock lending specifically, and we can look at this. I wish I had left it up. Well, I'm a little bit past it.
Yeah, welcome, Jeff and others. We're going to talk about SoFi after this topic. We'll jump over into SoFi.
After the darts one.
And then I already have questions for Q&A bookmark. Go ahead, Roy.
So if you can see this, securities lending, we had this great bump last summer with Robinhood, 54 million and then 87 million, whereas historically you're looking at like 15 to 20 million on average for securities lending. And I was curious about that. I was like, man, this is really something coming out of just left field. Q4 was pretty light. Q1 was $4 million. It was one of the worst that they've had in a long time. Now, there's a lot that goes into that, but the biggest driver of this massive ramp was simply hard to borrow stocks that were hard to borrow simply because they had recently IPO'd, and a lot of companies wanted to short against them. And so that's what absolutely fueled that revenue. Now, there's other beneficiaries as well, as far as trading volume, equity volume, options volume, and so forth, IPO access as well. There's usually a little bit of something there for the brokerage platforms that offer this. And of course, if you offer better access than other people, you'll tend to get a little bit more attention as well. So this is something that's really good for Robinhood, of course, but also it's interesting pivoting to SoFi. We've seen over the last couple of quarters, we've seen with the fireside chat and also the interview with Amit and Steve, there's a lot more focus and attention that they're giving, and also the newest acquisition on the Invest platform. And so this is also something that benefits other brokerages, including SoFi Invest. So any it's vacation when he goes home, because I think that's what's the abnormal part. But
Steve called me Friday morning to hint at the Noto thing, and he's just like, "Why are you up so early?" And I'm like, "Dude, it's 2 p.m. my time," because it was 8 a.m. He's like, "What do you mean your time?" I'm like, "I'm in Europe, man." He's like, "What do you mean Europe?" And he genuinely got like mad. He's like, one day you're in Argentina, and then you're back for a month, and then you're in Europe again. What the hell is your life? Like, what are you doing? And I was like, Steve, like, leave me alone, let me be. And because he didn't know.
You're single and you're able to do this, so why not? So,
Exactly.
but yeah, any thoughts on like brokerage and then like SoFi Invest implications? Any last thoughts on IPO, and then we'll talk about SoFi.
No, let's I think go into the interview, because I think that was the most interesting interview. I made a recap video earlier today, and I said, look, this was Anthony Noto's most candid interview ever. And that includes from when he chatted with me. Like, he was way more open, and I'm low-key jealous of Steve and Amit that they got to do it in person, because it's like a whole different vibe in person. Did you watch the interview before I sort of go?
I did, yeah.
Bro, he was energized. He was very candid. He gave concrete price targets. He broke down valuation models of how he sees it. He gave specific dates on different product launches. You couldn't have asked for more. Like, for a CEO to give all of that with such candor while buying shares. I mean, he bought shares that same day or one day before, because he bought shares, I think, on Thursday or on Friday, right after the JP Morgan stuff.
Yeah.
And talking about buying leaps, like,
yeah, like a DJ.
This is crazy. This is crazy.
Yeah.
So yeah, it was a 10 out of 10 interview. Really enjoyed it. I think it's going to be good for the community to get some of their mojo back. I saw Kyle completely shitting on SoFi, and then today he was just like, SoFi to $45. I was like, okay, well, I guess that interview is all it took, but it was very well done. What did you think? Well, maybe overall thoughts.
So I think it's interesting, of course, the way that he's presenting himself. I think Noto has historically, and maybe it's because of the type of business that SoFi's been in, he's not the best at that kind of interview, but it was a really good interview. Usually what you see as far as Noto when he goes on CNBC, when you get him at fireside chats and so forth, he's basically following a script. And oftentimes it sounds very wooden and very boring and very dry. This interview was the opposite. I think it really helps. Basically, what I look for in a company when I'm looking for leadership is, of course, leadership that has great ideas and is able to execute on that vision, but also leadership that's all in. Not like, SoFi's kind of a side project for me. If it doesn't work out, I'm still kind of set for life. So no skin off. I would be very concerned if we got that kind of Anthony Noto interview. I'd be like, oh, okay, there's a problem here. Now he's not the founder, but like he has that type of mentality when it comes to SoFi. He took ownership of a number of things, including SoFi Plus when they first launched it. I think Tanner was probably the most excited about any of us on that product, and he wasn't even that excited. I was just like, it's okay, I guess.
Yeah.
I think that was your response too. He's like, hey, we learned a lot of things. We've repivoted because that wasn't the right approach. And we've seen that where he's like, hey, this wasn't right. And so we fixed it. That wasn't right. And we're addressing it. I really liked also his comments specifically on shipping and building products. That the objective the whole time, and frankly, I think that they failed on this, was when they build something, it needs to be built for themselves, but also built for something that they can launch on the tech platform as well. Now they have the right arm of SoFi actually building those products, it sounds like. And so that's one of the reasons why I think cadence has been better, but also I think that that's accretive for SoFi and also the tech platform. Now, a lot of it was recapped, but I think that there was two recaps of other points that he's made. I think there was 2 points that were really, really interesting and appealing. One was, and we got to talk about this, like him buying leap options. So that, Noto's pretty conservative, and you want to protect your money. Leap options can expire at 0. So I guess as a resident degen, Tevis, tell us how you initially took that when you heard that the first time.
Bullish, because I mentioned this in my recap video. I was like, dude, this is something that I would do, and to see the CEO also doing it is mind-boggling. And his rationale was very logical. He said, look, I have a large amount of wealth, but I don't have a large amount of liquid capital. And at the end of the day, like he's bought $2 million worth of SoFi stock in the last 2 months, right? He wants more exposure to the upside because he's that bullish. He just, like everybody else, he doesn't have the net new funds to go into it that heavy. So he's buying leaps. He's probably going to buy super conservative leaps, like $8 or $10 for 2028 or
in the money.
Yeah, but
it's still a form of leverage, though, no matter how you slice it.
He does have the capital to back it up. Like if he let's say buys $8 leaps for 2028, he can fully exercise that. He's not buying it like I'm buying it, where I'm going to sell it 6 months before expiry, and it's a trade for me. Like he's buying it because he wants exposure at that price point. So
I the way that I took it, so like, it depends on, like, you have a little different mindset when it comes to leaps and options than I do. I like to, once I have my position fairly established, but I want more exposure, is I will buy leaps with something that I think is going to move significantly over the next couple of years. And I'll do that fairly conservatively, but usually they'll be out of the money leaps. And then those will be the vehicle that I'll use to be able to exercise profit. And so I'm kind of wondering if Noto has that in the back of his mind, where he's like, you know what? He sees where SoFi is going. He sees what the share price should be at that point. And a lot of it depends on the narrative and the macro, which we need to talk about too. But I think that's probably the vehicle that he'll use to take profits. And that way he'll just keep his shares the way that they are.
Michael Steinbeck says, best podcast ever. Wish you guys were on every day. If Tevis would just stop traveling. Yeah, man, I'm the problem. Let's put it all on Tevis here. Look, I saw some people, in the chat, Roy, say, oh, he's just looking to pump the stock, this and that. Maybe let me bring it up and call them out on this. But at the end of the day, I don't think that's fair. He mentioned explicitly that he's not looking for the next quarter or even the next year to pump this stock. He's looking, I think the direct quote was, I'm energized about what I do. I want to be the CEO for as long as they'll have me. He's not looking to retire anytime soon. He's not like one of these auto executives where they're there for a 5-year stint to collect their stock and then run. And as a result of that, punting every big decision or big investment that needs to be made to the next guy who's going to inherit it. Like, he is really looking at this like a legacy. So I think that the leaps, while they can be perceived, because they are inherently a short-term vehicle, as, oh, he's trying to get a pump out of the stock, I don't think so. I think he's just that incredibly bullish where, and I mean, look, the other interesting point, Roy, is that he mentioned that when he buys stock, it's to signal to the street how bullish he is. So that answers the question that we've been posing, where is Anthony Noto buying because, he wants to buy, or is he buying because he wants to signal that it's cheap? And it's, in fact, both of those things are true, right? Leaps signals that like on steroids.
Yeah. And like one more thing on that too, like there are definitely CEOs, and we've talked about it in the past, that are doing whatever they can to hype up the stock for a couple of reasons. Possibly one, to dilute more effectively, because they plan to do that. And dilution is sometimes accretive, but it is what it is. And SoFi's done that in the past. Honestly, SoFi is so far down. And they have a lot of cash right now. Like, it would make zero sense. That's not the objective. It could be that, we've seen that CEOs will do this when they have like PSUs or RSUs that are granted at certain strikes based on the stock performance and movement. We talked about that kind of with the CEO of GameStop, although it's a little bit different type of environment there, with the potential merger and acquisition, which sounds like it's not going to happen. But that's also not the case for Noto, because there's basically 0% chance. Like, it's 0.00001% chance that they get to 35s. Like, they would have to, SoFi would have to go to 60 with volume like overnight, and that's not happening. And of course, the third reason is, well, maybe to sell some shares and take some money, and you do that at a higher level. You see that very commonly, Like most recently, with one that we have in common, or we had in the past in the common with Andrew Dudum from HIMS, was pumping the stock, sold the day after as well. Has Noto sold any shares beyond when he's granted shares from his position just to offset taxes? I don't believe so.
Roy,
And so I have a hard time seeing him with that mentality of like, hey, I just want to pump the stock so that I can sell some shares, which, by the way, he was buying at a higher level than this too. So I think it's just that it's a long-term mentality. He is also frustrated, not just from his own standpoint, but like for shareholders. Like, he hates it. He says what he sees on Twitter, which is probably why I'll never get an interview with Anthony Noto, because I'm more critical, or I've been more critical. Although, ironically, Amit and Steve have been pretty critical too. So I don't know. Like, we'll see. But yeah, regardless, like it's because he's bullish. That's it.
yeah, look, man. What I'll say is he's different from Dudum in the sense that the way I see it, right? Dudum is one of those CEOs that started a company, it hit it big, it went public, and he's now, multi-centimillionaire, billionaire, maybe incredibly wealthy. Life has changed completely, and obviously he's going to sell just as any founder would sell, right? If our company got sold tomorrow, my CEO would sell his shares, and like that's life-changing money. That's like first time rich. You got to remember, man, that Anthony Noto is playing a completely different game with completely different goals, because he was rich when he took the SoFi job. He'd worked for the NFL, he'd worked for Twitter, he'd had multiple exits, right? Not to mention his career at Goldman Sachs. Like, he was already set for life, quote unquote, 50 million, 100 million, whatever the amount might have been, before he even freaking took the SoFi job. And so it's just like a guy like that is not looking to add, another pile of 100 million to his stack just for the sake of it. Like, he is doing this for a deeper level to fulfill a deeper sense, of purpose in him, not just to get rich. Andrew Dudum, for example, it's the first time, like, that's the first foray he's had into getting, and a lot of these like first time CEOs, right? Like, that's the first foray they have. And it's like, well, I get it, man. Like, you have lifestyle creep. You're going to completely change your life. You're going to sell to buy your mansion, to buy this and that. And like, I think Anthony Noto is over all of that stuff. This is his like third or fourth, shot at bat, so to speak.
Yeah. The other thing that stood out to me that I really appreciated was Amit asked for him to put on his Goldman Sachs hat for a moment and look at SoFi, his investment opportunity. Why isn't the market giving it more attention? And he went to a couple of things, but one of them, and I think that there's some reasons why that he didn't bring up that would be valid too, that are internal to SoFi, like their fault. But a lot of it's external, and this is the biggest factor. And so if you could throw this up, this is CME, FedWatch. Steve mentioned it as well, and it's good to follow if you're in anything that's rate sensitive. This is the meeting that's coming up here in June, so it's the next meeting. Current rate is 350 to 375. Yes, consensus is nothing changes, but there's 0% of people expecting a cut, and 4% are expecting a hike. And if we zoom out a little bit further, December 26, multiple meetings between now and then. This is the current rate. 32% of people think the rates will remain unchanged. 42% think rate hikes are a possibility, at least one. 20% two. 4.4% three. Then that's so small it doesn't really matter. So like the shift has been pronounced, and it's just related to what's happening with Hormuz and inflation, which has definitely fueled inflation. Of course, we're hearing one moment negotiations are very close and they're about to enter a MOU as far as moving forward. And then you hear the next moment like, hey, we might start firing at each other again. Like, it just like, it's tough to know when that's going to be resolved. And the longer it persists, and this is something that I don't think anybody had on their radar of like that the president would do this, that this would be this prolonged and this inflationary. But here we are. So going into this year, like the consensus was 2 rate cuts. SoFi guided for that. It's why they didn't increase their guidance. And I think this is a huge reason why certainly SoFi, but all these other names that are just being piled upon, that are fintech and financial companies, haven't really gone anywhere. He talked about it. He's like, why would you buy something? The market's probably looking at it this way. Why would you buy a company where you do a lot of lending and all of a sudden rate hikes make it so it's a little bit harder environment? Plus, if you look at your loan balance sheet, those loans now are actually worth a little bit less from a balance sheet perspective, simply because there's now hikes. It's a hard environment. So I think there needs to be more certainty with what's going to happen regarding rates. Certainly, this is not the environment that you want to see for a lender like SoFi. Now, I do still think that things will get resolved, with Iran probably in the next month. And as a result, we'll start seeing some of that inflation being a little bit transient. Not all of it, sadly, will be, because like fertilizer inputs, so for instance, are one of those things that just don't go away instantly. But yeah, this is a frustrating environment to be in that, but it's not a forever one. So for me, I've stood by this. I still think it's the case, although reserve the right to change my mind if we're still here with the Hormuz situation being pretty locked down, although we've seen a lot more ships actually go through the Iran corridor. By the end of the year, we're probably looking at some rate hikes, and that's really, really rough for SoFi. But otherwise, I think it's probably overestimated the number of hikes that we have. And I do think the fourth quarter with midterms, I think with what's happening with crypto, I think with the Clarity Act as well, and then this perception of possible rate hikes, I think fourth quarter is going to be the opportunity. And so I'm going to be positioning myself accordingly. I may even buy some leaps in SoFi too. So what about you? When does this turn around for SoFi, or what could drive that turnaround as far as a stock, not the company? Because the company's just fine.
Look, man, I already bought my leaps. I already bought them possibly too soon, but Noto had a very clear stance on this, that it is rate driven. And right now, the market is pricing in no rate cuts and possibly even a rate hike. We're going to see as war settles in what's going to happen. And also with this Iran stuff, like Trump is a master of taking it to the absolute limit from a bluffing perspective, or like I don't even think he knows at this point if he's bluffing or not. But the fact that he missed his own son's wedding, cleared out the entire airspace, moved carriers closer to the region, I was just like, 1000% something's about to pop off in a big, big way. Because there was also I don't know if you read about this, but there was also an attempt on Ivanka's life, and there was some ties there.
Oh,
yeah,
man.
so apparently the guy that got arrested, it was saying it's revenge for the general that they killed in 2020. Anyway, and I'm like, okay, they tried to have an attempt on his daughter's life. He missed his son's wedding. He is gonna bomb the absolute living shit out of this entire country. And now it's like, oh, we might have a deal. 60-day ceasefire. You don't even, you can't, it's not 4D chess, it's 40D chess, So we don't know what's going to happen, is all I'm trying to say. Whether it's going to be a rate cut, a pause, or a rate hike, or anything in between, we just don't know. We just don't know. And I'm still holding true to the idea that, we could have a rate cut still this year, which would be a more positive circumstance for SoFi. But Noto made it black and white when he laid it out. He said, we are in a rate environment, and that's how the market is judging our book value premium that we get. Right now, it's 2 book value. And he literally said, a lot is priced in right now at these prices. You're de-risked because a lot is priced in. So if you get a better macro environment, then you get 1 rate cut, or maybe, even more than that. I don't think that's going to happen. But if you do, then you're going to go straight back to the book valuation that you had pre-year. So now, by that same token, if you get a rate hike, well, all of a sudden it might get worse before it gets better. When do I think it turns around? I think by the second half of the year, it's going to turn around, because the conversation, I think Iran's going to be behind us. And I think the conversation is going to go forward looking towards the rate cut. And when that happens, the market is going to try to preempt that move. And I think that's when SoFi is going to make a move into the 20s and 30s.
All right. Yeah. And the other thing with SoFi too, did you catch the fireside chat at JPM?
Yeah.
Anything that you took away from that stood out to you?
You mean other than the analyst who said, I'm sorry to Anthony Noto because he's only been covering this company for 4 months and I'm quote unquote just catching up? Can you explain? He's basically what do you guys do? First of all,
yeah.
If anybody from SoFi is watching, if FIGR's watching, if anybody else, I love the fact that they're talking to retail, because we actually follow this company. We actually know what we're talking about. We actually know the numbers. Like back of the napkin math, I can quote you pretty much every number across every business segment that SoFi reported last quarter. And then you have the institutional, media that can't quote jack shit because they're juggling 45 companies, and SoFi is like so low on their priority list. But historically, it's been that if I go to the JP Morgan fireside, I'm going to get A, more exposure, and B, more reputational risk. And I think that equation is slowly changing because, even in just that podcast between Amit, Steve, and Anthony, or that podcast between myself, Tanner, and him, like there was a lot of buzz and there was a lot of nuggets dropped, and he can have a more candid conversation because he doesn't have to spend 30 minutes just explaining what the business is to these idiots.
Yeah, no, for sure. Like the end was actually more interesting than the beginning. The beginning was just like he's explaining the business to somebody that has no idea. Now, there's a few things that stood out to me. One of those was, he mentioned the word 100 million a number of times, and he basically said that they have these businesses or parts of their business that are in their infancy, which didn't exist or at least were tiny a year ago. And they're looking at them internally as like these have potential to be $100 million annual run rate type of businesses. I thought it was really interesting because we've seen like a lot of businesses do this where they have internally like these revenue expectations, growth expectations. SoFi has felt like, and I could be completely wrong because you never know the internals, that a couple of years ago they would just launch a product and be like, well, we hope it gets adoption with the flywheel, and it should eventually. Because I mean, like honestly, to be fair, if you have the super long-term mindset, the more members they have, the more compelling that flywheel is, the more that they get the cross-sell, the more they continue to drive their business. And they're able to do that. You talked about it again in the interview with Amit and Steve of like, they don't have to advertise their products. They have the member right there. But I think that's a mistake that you're looking too far out and you're just hoping that product will get attention. But instead, he talked about these four businesses. So big business banking, SoFi USD, the stable coin itself, SoFi crypto and crypto investing. And he also mentioned, of course, SoFi Plus. And the interesting thing with all of those is all of them are tied to crypto. Some very firmly, some I really doubt. I'm like, 100 million, we'll have to see. But I think a lot of them, 2 or 3 of them, very easily could have that and surpass that. But I love that they're actually looking at that, or they've announced that they're looking at that rather than just like, hey, we launched SoFi Plus like a year ago, and we hope that people like it. That was the kind of mentality like, that's not enough. So seeing that shift, I think, is really good. And then the other part, let me throw this up too, because I took notes. I wanted to make sure that I hit this. So he mentioned this actually on the JPM and also in the Amit and Steve interview, that internally SoFi USD, like they have 8 billion transactions on their tech platform, and also that SoFi is doing. And then when we move that over to the stablecoin, that's accretive. What's really interesting too, so they've made SoFi Plus a lot more compelling. There's a lot more adoption ever since they have done so. And this is one that I think will drive revenue, not necessarily EPS, just because, again, they are making it very compelling. It's kind of like Robinhood Gold. But this right here, if there was one quote that I was going to take away from this, it would be this. We're seeing a large percentage of them, this is people that were on SoFi Plus, actually taking out another product after they sign up for SoFi Plus. That's a great insight. We're actually educating people on what else they could do at SoFi. We're giving them an incentive to do it through SoFi Plus. It's a direct new revenue stream. And this play has been all about the flywheel, and this is a flywheel accelerator. It's really, really interesting and very bullish, because we've already seen in the prior quarter, Tevis, if you remember, historically you can look at products per member, and it's about 1.5. For the last year, it's been more like 1.4. We were actually a little bit higher than 1.5 the last quarter, and that's before SoFi Plus, the revamp thing, enters the equation. So I wouldn't be surprised if we start seeing continued acceleration on that flywheel, which is really, really exciting. And that's even outside of like crypto, if you discount crypto from that. Last question, at least on my end from SoFi, from JP Morgan Chase conference, from Amit and Steve's interview, has anything shifted for SoFi for you? Because I know, you've been more focused on a lot of other names, what's actually working and growing, and that's probably been the right approach. Are you still where you were with SoFi? Like, I think it'll work out long term. Right now, it's not super exciting. Or you're like, man, I need to get. Are you more excited or less?
So when Steve called me yesterday, and he's just like, "Just watch the interview, bro, whatever." And I was like, "Yeah, we'll talk after." He actually called me today, but I was sleeping because of the time zones, so I couldn't pick it up. What I told him is what I'll tell you. SoFi's stock price has been incredibly frustrating because, I mean, you're not trading in a vacuum. It's relative to all the other companies that you could have been owning. I'm not mincing words about that. It's been frustrating. Even if my average is $7 or $8, the fact that like it went to 32 and now it's back down to 15, that's frustrating. However, what I told Steve was I almost at this point just want to sell and take those proceeds and buy leaps. Just go ape in with leaps instead of holding, let's just say for the sake of math, 1,000 shares, sell those 1,000 shares and buy 1,000 shares worth of leaps, however many leaps that gets me. $15 leaps for 2028. And it's the same exposure from a dollar value, but the amount you command is much higher. And so you expose yourself to bigger gains while also taking on the risk of potentially losing all that money in 2028. I don't know. That's possibly one way to go about it. I think that's what TJ was also talking about. And when I talked to him, or maybe he said it on the stream last week, he was just like, look, if you want to have the same dollar value exposure, well, you take on more risk. You can do it all through options, but I can free up maybe 80% of the capital or 70% of the capital that I currently have locked up in SoFi shares and just go 30% of my SoFi position in leaps. It's going to be an insanely risky leaps position, but then that extra capital, I can leverage it to do other things with. And I have theoretically, the same level of exposure. So that's something that's been going in my mind. And the fact that Anthony Noto mentioned leaps while I've been thinking about all this was like, oh, maybe I should do this. Yeah, Jared says that's the DJ Tevis that I missed.
Yeah. So I have shares that are in my main portfolio, which is not like Roth or IRA or anything. Those I don't plan to sell or do anything with. When like if this overhang persists and we're 2 or 3 months down the road, macro seems the same and everything, nothing's really shifted, and we're here or lower, that's when I might start looking at that with my Roth and with my IRA, just selling those shares, buying the equivalent amount of options. Part of that is like looking at my portfolio. I usually have a certain percentage of my portfolio that's options, probably a lot smaller than you, but it's usually 10 to 15%. It's like 7% right now. Like I want to take on more risk. So, but I don't do it like, hey, I'm doing zero DT options. It's like as far out as far as time as I can get, and fairly conservative strikes. So, for instance, some of my main options that I have right now are $10 strikes for SoFi. Of course, I bought those when the stock was like $6, so it's still up. But yeah,
I don't know if it's my internet or if it's your internet that's like really laggy all of a sudden. So the chat can let us know. But yeah, I don't want to lock up more shares into SoFi, quite frankly, because it doesn't make sense from a selling options perspective. The premiums aren't there, and it doesn't make sense from a concentration perspective. Like if I look at dollar denominated cost basis, SoFi is my number one position. I put way less money into Nebius, and I have way more of a Nebius position. It's 40% of my portfolio relative to SoFi being 24% of my portfolio. So, but Leaps is another story. Leaps is, I think, really interesting because Leaps, I can even stick with like, $14 or $13 or something like that for 2028. It's super, super safe. Realistically, knowing me, it's going to be closer to maybe $18. But the point being, I can stick within the teens. It's just a matter of when do I think we're going to get those rate cuts? If we have one this year, how many are we going to have next year? Are we going to have two next year? What's that landscape going to look like? If we have a hike this year, then those leaps are going to be seriously at risk. So that's the fear. And to me, I'm like, well, maybe I just write them where I make that switch where I sell some shares and I buy some leaps like towards the end of summer, because at that point we'll have a little bit more visibility on 26. Maybe we even have the 2029 chain out or something to that effect, and it's more like it's safer, let's say. At the same time, as I'm saying all this, like, dude, I have 6% of my entire portfolios combined on spreads on Amazon. You know what I'm saying? So it's just like SoFi Leaps have treated me very well in the past, and the majority of the dollars that I've booked on SoFi have been through the Leap profits. So I know it works. It's just a matter of getting the timing right. Because what I don't want is I don't want to. So, for example, I bought them a couple weeks ago or a month ago, let's say. I'm probably going to burn 6 months to 9 months on those leaps without any meaningful move, because I just don't think SoFi is going to go to $30 before October, November-ish.
I agree. Yeah. Shifting away from, I guess I should say, like, I'm no more bullish and no less bullish on SoFi from the interview, or either interview. I was already very bullish, but I do think that it may continue to just have this overhang until that fourth quarter. So, like you, I did add some shares last week. It's 100 shares, so it's not a lot, guys. But it's my first ad in a while, and I just like, hey, long term, they're fine. I'm not at the point now where I'm buying leaps, but yeah, I'm bullish. I'm excited, but the reality is these rates matter significantly for SoFi, and until that clears up, I think the overhang might persist. And so I am a little bit reticent to increase the percent that I have dedicated to SoFi and also fintech names. They've been absolutely brutal and brutalized. There is a point where I want to start adding, but I have to figure out the best way to do that. And it's hard because, I just interviewed the FIGR Technologies CEO. That's a name where I'd like to have more exposure. I think I'm at like 6 or 7% allocation right now. I'd have to go back and look. I've been buying it, so it's hard to say. They're ridiculously well positioned too, I think, for the long term. And I mean, in the short term, they're growing 100% year over year on a lot of measures. So did you have a chance to watch that interview yet?
I haven't finished it yet. I started it. I tweeted about it, but in classic Tevez fashion, I have not finished it yet. It's one of my tabs that's open right now.
So let me just share that one clip that I shared previously, yes. and I'll leave it to the rest of the people. Gotta share the tab instead, and tab right there. Okay, perfect. And let me pause, bring that back, and full screen it. Okay, and I apologize for the layout of just how StreamYard does clips, and I was lazy. So I asked them basically where they think that they're going in the near term, why this is here, the first lien, what's the opportunity?
I think we are going to be Fannie Mae in a couple of years. So people will be thinking about us as the standard for mortgage and other assets, the rails through which they trade, the standardization through which they're originated. And that is something that, so banks and non-banks use Fannie Mae, because ultimately, which is unique. And I think that is, I come back to, I don't know if your audience is familiar with Brex and Ramp, but Brex is where I work. It's a credit card company. Ramp is another version. And it's like, they both spent all this time building their own underwriting models. They spent time building their own capital markets platforms. What if that was unified? Because ultimately, people don't compete on capital markets and credit. They tend to compete on product experience, marketing, brand, et cetera. And so standardizing these rails across multiple fintech asset classes is the really powerful unlock. And that's what we're focused on. I think we are going.
And it's really interesting. Like right now, obviously, there's not a lot happening in that first lien space as it relates to mortgages specifically. Just because rates where they are, people are tied down to the low rates, interest rates. We've even seen some housing prices fall a little bit here in some of the urban centers. But their position, like they're building it out. And one of the things that I thought was really compelling, because they've done this with HELOCs already, where they've leveraged. They are a crypto company in a way. I think the better way to think about them is like they're the eBay of financial services, kind of. So I know the term democratize and democratization is a little bit too ubiquitous across a lot of these names, but they entered initially. They're like, hey, we can use cryptocurrency to be able to drive a ton of efficiency gains across the board with HELOCs. And as they approach all these banks, they were like, hey, that's awesome. Let us know when it's working, and then maybe we'll jump in too. And so then they figured out, okay, we got to build it ourselves, illustrate proof of concept. And they've done that. And they've dominated the HELOC. Like they've carved out a lot of TAM, but the TAM is only so large for like that second lane. Now it's been a very good environment for them because, again, the environment that we have with people having these houses that they're up substantially on that they don't want to sell, one of the ways you tap into that is through HELOCs. So they've shifted, though, so that more than half their revenue is actually coming from partners that have onboarded. Their sheer number of partners have like more than doubled in the last year. Like at the earnings, they said they're at 350 partners. In the interview, he said we're at 380 now. And yes, there's some partners that are much smaller than others, but as they're able to do the exact same thing that they did with HELOCs as they are with mortgages. And the way that this works is for them to be able to underwrite these type of deals, especially if it's something that's a very small mortgage, like something that's under $300,000, it costs them about $1,000 versus like the traditional means you're looking at like $12,000. I'd have to go back and see the exact figure that they quoted. It's substantially higher to the point that banks will offer it usually just as a service because like, hey, you're a member of ours and we'll do this. There are some ways to get some efficiency, but nothing like what FIGR has to do. And the thing is, like, they've built out this vertical integration. So they have their own blockchain, the Provenance blockchain. They have their own stablecoin, which is tied to real world assets. It's the first SEC registered stablecoin yields. And it took time to build out a lot of those. And just like, so he worked for SoFi previously as well. The founder of FIGR is the same founder as SoFi, Mike Cagney. But just like Anthony Noto pushed back on a couple of times actually recently, was that yes, he did this on X. There's a lot of more regulatory freedom to go and pursue a banking license or charter of some sort. We're already seeing some political pushback. The Democrats, if they get power in midterms, it's going to be a harder environment for companies that are pursuing those things than is currently perceived. And CEO Michael Tannenbaum basically said the same thing. So, because I asked us like, well, what's preventing, like, so you have these big partners that are coming and on board, seeing all these efficiencies. Why don't they just build it themselves? Some will try, some will probably succeed. But the reality is, the TAM is like a $300 trillion market, I believe, which is insane. So there's plenty for a lot of disruption there, not just from FIGR. And second is it takes deep understanding of traditional finance, which these guys have, and also a deep understanding of cryptocurrency, which these guys have. There's not a lot of companies like that. So they're positioned so well. If rates stay up higher for longer, great. HELOCs will do great. The Agora, the auto lending, democratized prime as well. Those are all going to do great. If rates really begin to come down and there's a heating up of the real estate market, and that's probably not going to be in the next like 6 months, but a year or two down the road, they're so well positioned. I don't think him saying that we're going to be Fannie Mae in the future is hyperbolic or unreasonable. It's like, man, if they're not, who else is going to be? And that's huge. Like this is not a name, Tevis, where it's like, yeah, this could double in the next 3 years. It's like, no. In the next 5 years, you could be looking at a 10 to 20x. Now you need execution, and not everything that they're building is something that I believe in. The open network that they're building, I'm like, yeah, maybe we'll see. But they need backer help for that. But even without that, like my baseline assumptions with FIGR is like, man, it's a good opportunity. Similar overhang is what's happening with Robinhood and what's happening with SoFi as well. Fintech, anything to do with lending, rates and stuff. Even though a lot of that really doesn't impact them much because they're growing 100% year over year, it still is an overhang on the stock. So it could take a while, but I'm like, man, I want to get my position built out before then. And so that's the higher priority for me right now than SoFi at 15, just because I have a lot of SoFi.
Okay, two things I'll say is with regards to FIGR, again, very rate sensitive type of company, right? As rates come down, they're going to benefit. But I would imagine also crypto exposure is something that will move the stock. And so, like, it almost seems like a double whammy. Like, as rates come down, the market goes risk on. And as it goes risk on, um, then crypto is going to be in a rally as well. And so you have this double sort of beneficial type of exposure from a sentiment perspective. And I think that's a good setup going into the next couple of years. Now, 10 to 20x is really interesting, which begs the question, this is a $7.5 billion company. That's a bold statement to say 75 to $150 billion. Where is this as a percentage? Are you fully built out? Where do you want this to be as a percentage?
So it's like any business that I'm not sure if it's necessarily generational or not. They might be. I need to continue to assess them as a business and as a company. I need to get to know them better. But I'm about like 7% or so. I'd like to get that up to 10, and that right there, is probably the ceiling. I do want to get some options in there again, like this summer. I'm not in a rush to necessarily buy those. But like for that 20x, you need success in the first lien market because it's a ridiculous TAM. And then you need macro to cooperate so that the real estate market isn't just dead for the next 5 years. I think if you get both of those and neither are crazy at all, dude, like the size of the first lien market is ridiculous. And who can compete with these guys? The great thing is, like, it's not just like who can compete. You don't have to compete with them. You partner with them because you look at this and you're like, okay, these mortgages, which we previously did, which at best were unprofitable, we can use FIGR technologies, pay them a little bit of money, and benefit ourselves. And so, like, the slide I know you didn't like, but when people partner with FIGR technologies, usually within 6 months, they've actually doubled their what they're doing as far as volume for loans. But there's a lot that goes into that. It will take time to build and execute, but like they've already proven proof of concept what they've done with HELOCs to the point that others are trying to move in that space. Good luck to them. But man, I don't think it's crazy to look and see. Like, they're such a small company, but I think they're going to be vitally important in the future. And like one other thing that I really like too is, so you have two Mikes, Mike Cagney and Michael Tannenbaum. Michael Tannenbaum is the CEO, and I asked, like, how does that partnership work between him and Mike Cagney? And the way that I interpret what he said and also what I've seen as well. Mike Cagney, he's not fully like this, but he's a lot like Jack Dorsey. And you know my thoughts on Jack Dorsey. Like, I think he's an incredible products guy. He's one of the best startup guys in the world, and he's a very terrible operator of a business as a CEO. Just, he is. And so I was like, hey, the dream environment would be you have somebody that's a great operator and great manager that can execute on the near term and help those things that are important to investors not be forgotten and execute on this. At the same time as you have like a CPO or CTO type of guy that is just launching things left and right, that's looking at these opportunities that are further out, and that they're able to work together. And that's exactly, I think, what you get with this environment. Now, with Mike Cagney, there were some questionable things. And I think anybody looking at this company needs to look into that, like why he left SoFi. We'll look into that. I'm not going to beat a dead horse here. But I think that's probably the main reason why he's not the CEO, even though he is a co-founder of this company. But you don't really have that risk either with his current positioning. So it's like, man, you got like an incredible, he's not a CPO, but you have somebody like that, like a Jack Dorsey, creating and executing on this vision while you have somebody that is operating the business. And that's why you're having this explosive growth. So I think it's really compelling.
Interesting comment here. Natalia says, I have a HELOC type mortgage loan with FIGR. It was much faster and easier to get that loan than with competitors. Rates were a bit higher, but I'm happy I got the loan to get a second property.
And I hear that time and time again. And like the bottom line is, people will oftentimes just look for the price, but the speed. Like you can apply for a HELOC, and within 5 days. Now, average is not 5 days, but within 5 days actually get the money versus I think the nationwide average is like 45 days or something like that. I think their average is like 12 to 15. I'd have to go back. They've said it a number of times. It's asset-light revenue. More than half of their money is asset-light revenue because, again, they're building a platform. So,
yes, Michael, this is what Roy said.
Yeah, I don't think, obviously.
Roy should clip that and ship that. That's
right.
That's a big target.
Yeah, I don't think I tagged it there. But no, 5 years, macro cooperation, execution on first lien. They realistically could be flirting with that. And I'm not, they may not get it. We might be higher for longer. Rates have raised. The real estate market is dead. I just would be really surprised if we have another 5 years because it's such a huge part of our economy. And the thing that's driving inflation right now is something that could be resolved. So, yeah.
I got to do some more reading on them, honestly. I have some of these like little positions that they're just not going to move the needle in any direction for me, but they exist, in my portfolio. Like Hood is 1%, Lemonade is like 0.5%, Air is like 1%, VG is like 1.5%. Nothing's going to really move the needle for me there. Like if they double or triple, like it's going to be like cool, not really a big mover. So I'm kind of thinking like, do I want to just sell all of it and consolidate into one position and just do like a 6 stock portfolio or 7 stock portfolio? I don't know. The other thought is like, well, if I book some gains on Nebius, like where will I find a better home for that money? Definitely not in CoreWeave, in my opinion. Because like, again, it's the same thesis. FIGR could be interesting. Yeah.
So this is one of those just with HELOCs to kind of show what they've done. You can look at what all is involved in the process, the traditional third parties that are involved. And FIGR internalizes, like that's a thing. Customer acquisition, origination, application intake, doc prep, signing and notarization, partially funding, or in some cases, funding record and lien perfection. And you can see like what they have done internally, the savings. So in cost, all these 30 to 70 basis points, 20 to 40, all these add up ridiculously. This one's annualized right here. And then the time savings as well. And they're going to do that in first lien. They're just starting. The prime credit stuff, they have tailwinds there too because of what's happening with the prime credit concerns with SaaS. We're seeing it also benefit the loan platform business and the demand that's there for SoFi. So like, I don't know. We'll have to see, but it's hard for me. Like it's hard for me because I have so much fintech. And I think most, if not all of it's undervalued. And I don't necessarily want to expand that percent that's allocated to fintech and finance in my portfolio, but I want to add more to this and get it to 10%. So like, how do I do that? Well, I guess if the entire rest of my portfolio grows, then it's like, okay, 10% is actually easier to reach in some ways, but yeah.
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 I want to ask this question to skip the line because I think it's a great question. Roy, FIGR is currently $34. Is that a good price, or do you think this is going to drop further?
I was buying at 38. So yes, I first started like writing like I've talked about it since IPO. I wrote an article at $27. I bought a lot at 27. I think anything under 40 is just awesome if you are willing to hold long term, because like short term rates do matter. It's funny because the rates actually help them with HELOCs, and it hurts them with the first lien which they're trying to move into. It actually helps with the democratized prime too. But yeah, I think it's a good opportunity here.
And with that, shall we start our Q&A, sir?
Yeah, I think we'll just quick note because it's in the title. NVIDIA. Let me actually mark it here too. Don't want to like break down the earnings here, but just like, did you see the results and did anything surprise you?
I did see the results. Nothing surprised me. I actually wanted to go back to our old. I had the clip from our old video, but I didn't want to post it because it just made you look bad. But what did I say was going to happen? They're going to beat all metrics and the stock is going to fall because that's what happens with NVIDIA. Raven is asking, what is your reaction to the NVIDIA price action post earnings? Are you still bullish in the medium term?
So, by the way, rain has just started pouring down. So if I disappear, it's because power got lost because Houston cannot manage its power grid. But yeah, regardless, no, I thought it was a really good report. And to go back to that comment, Tevis, I wasn't saying at earnings it would fly, but over this next quarter. And so I really think so. A lot of it's keyed to estimates. If we look at this, revenue estimates, EPS as well, if we scroll down, it takes just a minute to load. You can see the revision right here. There was a pretty significant revision of NVIDIA revenue. And if you look at this compared to that $1 trillion number, which Jensen Huang has put out, that's actually fairly low. This is the 2026. This is the, oh yeah, this is quarterly. So a little bit further out. And we can see this earnings cone, of course, gets bigger and wider going out. Analysts are sleeping on this as far as their estimates. I haven't looked at price targets. Let me see if there was much movement there. And there was some upwards of price targets, but the price has fallen. So everything in this space, like I still stand by it. I think that within the next 3 months, as long as macro doesn't get in the way, so like we start shooting at Iran for the next 3 months, inflation doubles, something like that. Obviously, NVIDIA is not going to get near 300, but I really do think that by the time we get to this next quarter's earnings, 3 months out, we're going to be close to 300, a lot closer than we have been here. So like 280, 290, could even be above 300 as well. Now, the one piece that's missing for NVIDIA is Tevis solving that puzzle. Until it does, I think that there's some overhang, but yeah, nothing changed for me. Still very bullish.
Bro, I left that puzzle a continent away, so you're going to be waiting for a while on that one.
We're doomed. Did you hear the thunder? I don't know if it came across your mic.
I did, which is not very Houston-like, but it's dark out here. Look, it's like fully nighttime out here.
Yeah.
So crazy times we're living in, man. But NVIDIA, yeah, nothing surprised me. I think the demand is still incredibly strong. The fact that they're still beating numbers is staggering. If you think about 80 billion in a quarter, like holy, the dividend raise was really interesting as well. So yeah, man,
Oh, yeah.
it's the biggest company in the world for a reason, right?
Yeah. Still at the center of the air race. All right, Q&A time.
Q&A time. Throw your questions. We got 23 questions already bookmarked here, and I'm sure we're going to have many more. We got about 300 of you watching on YouTube and a whole lot more on X. So appreciate you all spending your Saturday with us. Let's get started with Q&A. Thomas, from before, like 4 minutes into our stream, said, I'm getting in early again for my question. First question in the stream. Roy has been upfront about his plan for BM&R, but Travis has been quiet. Any changes to the position? Am I adding, selling, holding, doing options? I'm adding shares. So I bought a little bit of shares this week. Nothing that's significantly a needle mover, but it did lower my cost basis quite a bit, which is great. I might do a little bit more of that. I'm selling covered calls on BM&R around $28, $26, $30, around that range, a month out. So I'm doing that actively. And I'm using some of those proceeds to buy shares to lower the cost basis. Now with BM&R, what I want to do is I want to eventually get out of half of my position to just lower my risk exposure when I'm not holding a bag, when I'm not at a loss on that position. So probably around, $35, $30-ish, over 30. I'll start writing more aggressive so that I can get out of half the position, and then I can just let the other half the position ride. But it'll be much easier to, essentially sleep at night because I won't have as much exposure to BM&R as I currently do. And that one has been like my biggest loser of, recent memory. So very underwhelming. Am I jaded on it? I'm starting to be a little bit jaded on it, but I think if I zoom out and look at the macro, like there is still a strong thesis to be made that once this crypto winter turns around, then it's going to be good for BMNR. The thing that's making me more jaded is the fact that they're slowly deteriorating even further on MNAV. So earlier this week, I mean, they caught up a little bit, but earlier this week, it was like at a 0.9. And we've never seen a 0.9 before. So that's not an encouraging trend that I want to be in if that keeps happening. But yeah, that's like my stance. I'm just selling covered calls on it right now, adding a little bit to lower the cost basis so I can write more aggressive covered calls, and then recycling that money from premiums into just continue to lower my cost basis. I want to get out of half, around the $35, $40 range, and I'll let half ride.
Yeah, for me now is not the time to add. I think that the biggest and most frustrating thing that people have, especially with Tom Lee, is he'll put out these really rich price targets on things like Ethereum, and he'll say things like, "Hey, mini crypto winner," and we're at the end of it. Look how it's moved relative to X, Y, and Z. No, I don't. And I think previously was even saying that we're out of the 4-year cycle as far as it, and obviously none of that's been true. I entered this position fully expecting a crypto winter, leaving enough time in there so that I could come out the other side and not just be whole, but be up. I still think that's going to happen. I don't know if we have bottomed yet. It's hard to say. I'd say probably we haven't, which is not fun to say. And if we have, I still think that we're a little ways away. Again, I think fourth quarter changes things in this name too, from seeing that accumulation. Now, going back a little bit, MNAV, very important measure, because if you're diluting below a 1, it's not accretive if you're buying Ethereum. It's just not. And so if we see that continue to become more and more detached, and yet the buys are still there, I've questioned it before, but we've seen brief times where we're like, yeah, there was still an opportunity. If we're at like 0.75 MNAV and they're buying a bunch, something does not add up. And I will call it out. I might even get out at that point because I feel like that they've broken their word. I'm not at that point. I'm still very bullish on Ethereum. I own a lot of Ethereum and BMNR too. The one thing that I'll say too, as far as the MNAV, in the previous cycle, the only digital asset treasury that there was in 2022 was MicroStrategy. We saw an environment where Bitcoin was rising, and yet MicroStrategy had not taken off. It was at the end or the tail end, maybe it was early 2023, where their MNAV actually got down to about like 0.65. And that was, the digital asset treasury. I don't think that we'll fall that far, but even among leaders that are in the digital asset treasury space, in a prolonged crypto winter, you usually will fall under the MNAV. Now that's an opportunity to buy back stock if they have cash, sell silly things like orbs, and do that. Like, obviously they can't do a lot right here just because their market cap is so high. But
I mean,
so yeah, like that's what I'm mainly keeping an eye on. And I don't see any way that they can dilute when it's like so far detached. We're not at that point yet, and buy a whole bunch of shares. So if they do, I got to have some answers. Otherwise, I'm getting out.
Yeah, two things I'll say. I mean, it's not that silly for them to hold orbs when OpenAI IPOs later this year, and all of a sudden orbs is pumping. And then this is the second piece here. Batty said Russell inclusion will be great. So BMR did make it into the Russell. And I think that rebalancing is going to happen in a couple of weeks. That's going to force a lot of passive dollars that's chasing the Russell to be put into BMNR. So that will also help with regards to the MNAV equation. But largely, I agree with you. It's in my mind right now a second half of the year type of play. So I think we need some patience there.
Yeah.
All right. Third Splash Bro, Travis and Ron, when's your Noto interview? I feel like you guys should have a sit-down chat with Noto first.
Yeah, well, it's not been sit down, but you've had an interview already with Tanner. That was the first retail-oriented interview.
Yeah.
I'm not sure that he would be willing to have me interview him. So maybe so, but
I think so. Look, you know what? I do think the format adds an entire layer of legitimacy. The fact that these guys have a podcast that's in person, in a professional looking studio that's professionally edited, lighting, cinematography, all this other stuff, it feels more legit than a couple of dudes over StreamYard talking about the stock. And so if I'm a
Yeah.
CEO of a publicly traded company, like I would much rather go on something like, basis points versus having something that's not in person. So I think the format lends weight to that, making it easier for the guests to say yes.
For sure.
That said, I think, as SoFi continues to open up, he will eventually have chats with everybody and have interviews with everybody. Like if Vlad gave me an interview and I have a negligible amount of Robinhood shares, and I think largely I've been critical of Robinhood more so than I've been constructive about it, then I think, Noto and SoFi, if they follow that same strategy of going through the retail base, they're going to do the same.
Yeah. I mean, like there's a possibility, but I think with Amit and Steve, even though they've been more critical than I have of SoFi, they have, like you said, a bigger platform. A lot more people will see that with basis points, especially Amit. And for you guys, you've been a lot more favorable and bullish on SoFi than I have. And so there's that plus Tanner, you're a big platform too, but you guys have a bigger one. And I'm smaller and I've been more skeptical and pessimistic, even as a bull. Like a lot of SoFi shareholders, like when we were at $25, called me a bear. I'm like, just call it like I see it, guys. And I don't think that Noto is necessarily wanting, just cheerleaders, but there's a reason why he doesn't follow me on X, and he follows like everybody else.
That's interesting.
So,
I
can you throw up BEH nameable? Yeah. Do you find it weird that SoFi is engaging more with retail now that the stock is down? Why didn't do it a year ago or the year before? I think because he realizes that the previous strategy was wrong. Like he's the type of guy, when he realizes like we were in error, we made a mistake, he doesn't just double down. He says, all right, time to make a pivot. Part of that pivot, it was before they hired data-driven investing, but that was a part of the pivot where they're like, we need more exposure to these guys. We do have a lot of retail that love SoFi, that are customers of SoFi, that are investors. We need to do better in our communication. And then like one of the big pieces of criticism that we've had was when they would make a major move like dilution, and they would not communicate very well at all. And that's a huge mistake for a company. So
yeah, I agree. I like the transparency in either direction. If the stock is selling off, then I would rather have transparency than nothing. And if the stock is going up, I would still rather have transparency. Like there's no downside to it. It's just more information. So we, as outsiders looking in, it's all upside from us, right? So regardless of what their motivations are, we should be thankful. Crossroads, have you looked into Zeta? Do you think we're heading into a rotation out of AI hardware and back into software? Would love your thoughts on Zeta if you've ever dug into it, Clipgrid says.
Yeah, we've done a Stock Tank episode. Wealthamatica presented, and he did a great job. Helped my understanding immensely because it is more complicated than you look at on the surface. It's interesting. The 1P data is a part that I've struggled to wrap around my head. And actually, there was some interesting information that came out related to somebody that I thought was a competitor. They actually use Zeta. So I think it's a good company and a good opportunity. It's hard for me to say whether it's great or not. The software, like there's some software overhang, right? They're in the wrong space. And so there's going to be some headwinds against the stock until that shifts. We saw some interesting moves by some software names over the last couple of weeks relative to the semiconductors. I still think it's too early necessarily to see a huge accumulation in that, but I do think that the market's going to start doing a little bit more sifting. Instead of like shoot first and ask questions later, as it relates to everything software, they'll start to realize, okay, some of these companies legitimately, they may go to zero. Some are going to have a lot of headwinds, but there's others, and I think Zeta might be one of those that are positioned and they're not hurt by what's happening with AI. Maybe even in some cases, they benefit. And so this is a name that I think will get some appreciation maybe in the second half of the year. I'm not investing in it. Again, I think it's a good opportunity, not necessarily a great one, and I like to accumulate just the great ones. You're muted.
Sorry. Have you guys ever regretted going so heavy into SoFi over these last 4 or 5 years? I started investing into it when it was IPOE. The company has done amazing. Stock price, not so much. I agree 1000%. This is what I was saying a little bit earlier. Like, the stock price action will completely make you jaded to a certain degree if it just goes, range bound. Now, if it's range bound and like the range is $4 to $32, then it's a hell of a range to be bound in. But compared to some peers that have been just going up and to the right, like, yeah, absolutely. This one has had a little bit more cyclical price action. And like I said, the closer we get to like $10 or lower, the higher and louder the opportunity cost, comments come out of the woodwork. And the closer we get to 20 to 25 to $30, then the quieter it is. I would say yes, but the majority of my position was built under $10 in 2022. And I did own it at IPOE, but I owned like under 100 shares at IPOE or 100 shares or so. And now I own significantly more than that. But it's all been at a lower cost basis.
Yeah. Yeah. For me, obviously, yeah, like in hindsight's always 2020. And if you're in a name that's done relatively little, and you're in some other names like Nebius, which are just in air test systems, it's like, man, I wish it was just 100% there. Hindsight. But like the beyond that, the one thing that it was a huge mistake on my end. When I shifted my mind on Robinhood from fantastic trade, I was calling the golden confluence. It was one of the very few that was just pounding the table on that, to like, this is a generational company with a great opportunity I wanted in long term. What I should have done, because I realized then, quite bullish on SoFi, but even more so on Robinhood, and I needed to increase the position, I just said, you know what, I'm just going to do that through new funds coming in the market for me from some gains that I've taken elsewhere. What I should have done at that point is honestly sold some of the SoFi, sold some of the Nubank as well, which have done relatively little since that time when it clicked in my mind about 1.5 years ago, and allocated up to the amount that I wanted in Robinhood right away. And so I'm not going to make that mistake. Like, if it's, I don't think I'll make that mistake again, where I'm like, hey, it's in the same sector, same space, and I want a lot more here. I'm more bullish on this name than others. I'll go after that. I wouldn't have sold out fully, but when you're more bullish in a name versus another, why not have more allocation and make that a hurry? There's more to it than that. There's tax implications and everything, but yeah, I should have done that. I wish I did. Hindsight's 2020, and I've learned from it.
Sure is. All right, we got to move a little bit faster on these. We got 27 questions and 30 minutes to go. Thoughts on VRT?
Vertiv, they're good. The one thing that is a question in my mind on them is, as a lot of data centers move to 8 VDC, there's less of a need for cooling specifically. How prevalent that becomes, how fast that happens, I don't know. But how Vertiv, it's pretty aggressive. How Vertiv is positioned for that, I'm not sure. I'll leave it at that.
Roy, we might have a little surprise for our audience. We might have to cut a little bit of the Q&A short. We'll see, but we might have a little surprise for our audience, because I just got a message about a certain individual who wants to join the stream.
All right.
And I think you might know him. He's a little bit famous after Friday.
It's Anthony Noto, isn't it?
It's there's a 33% chance, that it's Anthony Noto. It's one of those three individuals. You don't know who it might be.
I'm pretty sure I know who you're referring to, but yes.
Somebody says Noto, and the other guy says, "Please be Steve."
One of those is probably right.
Yeah, and it's Noto. And can you imagine, just Noto just pops on, "Hey guys."
Randomly like messaging, "Hey, can I jump into the stream live?" Like, okay.
Can you hear that?
Yes.
I don't know if that's somebody's popping off or just in a war-torn country over here.
Oh man.
Let's answer some questions. Oh, there he is, Mr. Fiorillo.
What's going on?
The Mr. Fiorillo from the Basis Points podcast, ladies and gentlemen. Welcome, welcome.
I didn't realize we were streaming at the same time. Matt and I just got done, and I went to YouTube to see what I could watch. I'm like, what are they doing live? Don't they do something on Fridays?
Usually, this guy's traveling, so we shifted things. I also like that we're like staggered, like this way and going down and up. So nice look.
All right. So what's going on, guys?
Gotta sit up, Steve. You're in your recliner there, just chilling, living that retired lifestyle.
So
No,
let me.
if you the way that my camera's set up, I had it set up so I can see everything on the walls over there.
You crap, buddy. How was Friday?
So-
Tell us.
Yeah.
I mean, I know you guys watched it. I mean,
Hell
it was Noto Uncut. Like, we should have named it like Noto Unfiltered or something. Like, it was just that. I've never heard him get that unfiltered, open, relaxed, whatever you want to say. He went through a lot. We gave him the forum to do it. It was a pleasure to listen to him.
Yeah, it was well done. Go ahead, Roy.
So we covered the interview. Talked a lot about SoFi too, and there's a couple of SoFi related questions in the Q&A. But I asked this of Tevis, and of course, if you don't want to answer, that's perfectly fine. But you were there. You were there with Anthony Noto in person. You interviewed him. What shifted in your mind from before the interview versus now on SoFi, if anything?
Yeah, I actually believe it's a tech company.
All right.
That was,
And I've been probably the one that has been the most critical about it from that aspect. And look, obviously everything's not in there. Obviously, we talked for a little bit before we started rolling. And I now am seeing probably what the two of you and also Tanner were seeing about the tech side. And I do think that they are a tech company that happens to run a bank. I mean, I don't know how else you put it. Really listening to that. And I think that the SoFi USD coin is going to be so damn big that is not being factored into their forward growth. And I think the opportunity is massive. I really do.
Look, I mean, I think Noto put it the best of everybody. He said, I don't give a shit what you guys call us. As long as you believe we can do 30% ROE, year on year, that's all that matters. Call us a, fucking retail company if you want to. As long as you can have the return compounded year in, year out. He said, look, that 30% is our target. Sometimes we'll beat it. In Q1, we got over 40%. Maybe in Q2, they're going to do the same. But as long as they can do 30 consistently, then you can call it whatever you want. Won't matter.
Yeah, I mean, at some point, if they keep compounding and keep exceeding and keep growing tangible book and keep growing earnings, at some point the market's either going to do what it should do, or somebody's just going to acquire them. I mean, it's going to be one of those two things. So I don't know. I mean, did anything change in your minds from the interview?
Not really. I was already bullish, so like I didn't become more bullish from that or the JP Morgan conference. There were some things that were clarified, and I thought it was a great interview. I think it benefited him, SoFi, and also like you guys asked really good questions too.
Yeah, Steve admitting it's a tech company is a big deal, man. This is we're finally breaking through. That's also a clippable moment that I should have probably jotted down. Yeah, it's interesting to have these like strongly held beliefs and then have them completely change after an interview. But it's also interesting to have the CEO be like, I'm buying leaps. Like, I don't give a shit. Like, I know what I'm holding. I know what I'm sitting on. And I know the execution. The market's wrong. And generally speaking, you'll do very, very well if you have that type of conviction. You're like, look, the market's just wrong. I bought $2 million worth of shares over the past month. And now I'm looking to buy leaps on top of the existing, 12 million shares that he currently owns.
Yeah, I mean, there was a question that I asked and I phrased it as SoFi is a technology company. What you guys didn't see was before the interview started, the conversation that we had. And that made me ask the question that way instead of framing it a different way, because before the camera started hitting record, I had already made up my mind that it is a tech company. And that was because of the conversation we had pre. And I'm going to go into it I'm going to make a dedicated video about what actually changed my mind. But look, I'm more bullish than I was. I've always been the bull that always had one foot out the door at times, and times I was all in, and times I got angry. And I mean, look, there are things I still am a little iffy about, and that is certainly how do I phrase it? The rebranding of what they're doing. I want to see how many companies are actually going to take their white labeling, because I think that's very big. But
Yeah.
I think that what I said is, and I talked to somebody about this, and I don't want to say who, but I said that Noto needs to do more long form. And it's annoying because they only give him 2 or 3 minutes on Bloomberg and CNBC. And I don't like that. I think that this guy needs to do much longer form content, because did you listen to the JP Morgan fireside?
Unfortunately, I did.
Okay. So he walks in and I say to him, I'm sorry. He's like, what are you sorry about? I'm like, because one, they turned the lights out on you. Two, they gave you an analyst that had only been covering SoFi for 3 months. Like, what are they doing? Like, I listened to the whole thing and I was like, one, the guy's a credit card analyst. What's he doing covering SoFi? And then why is he interviewing the CEO after covering SoFi for 3 months? I mean, there are probably 100 people on X that I can actually name that could have done a better job asking Noto questions than that analyst from JP Morgan.
Yeah. Like the end was very good, and there were some, like, the best thing for me is, like, they're actually they probably were doing this before, but they've been very clear, like, measuring, like, those new product lines that they've launched, not just saying, hey, we're just building out the flywheel, in 20 years from now it'll be great, but attaching a figure to it, the $100 million opportunity, annual run rate on 4 different legs. Now, I'm skeptical on one for sure, like hitting that anytime soon at all. 2, I think it's very clear line of sight that it's going to happen. And 1, it looks like it can happen. But yeah, it was good, but it wasn't the best. I thought there was a lot more value in your interview, and yeah, people should definitely watch it if they haven't already. Do have.
Yeah, go ahead.
Well, I was going to say we do have a lot of Q&A that you can help us with, but maybe one more thing from Tevis, and then we'll start hitting those Q&A.
Yeah. One thing that was also interesting to me, and this is something that he mentioned in the earnings call, but it's good to reiterate, like the SoFi Plus rebrand, the way I put it in my video was that this is really the hub of that hub and spoke model, because all of 2025, they had about 60,000 paying subscribers. Took it back, into the lab, reworked it, and they got 160,000 subscribers in the first 6 weeks of launch. So, more than double what they had all of 2025. And it makes sense because the value proposition is there where, people can actually earn more money even by paying a subscription because their APY is higher. And I think that is going to be a really compelling value proposition because, when they bought Composer and Primary Bid and even Peach, like these are all going to help make the SoFi Plus product even more compelling. I mean, for Composer specifically, Noto was saying at the JP Morgan fireside that, like, hey, we could charge you for those extra insights or that portfolio building that you're doing. And really, that's one lens that you should be seeing. And like, that's the thing that also points me to tech companies, Steve, is like, well, how do tech companies make money? It's software as a service. It's a subscription model. Same thing with SoFi. If SoFi Plus goes from 160,000 paying members to 1 million paying members, which is, his goal, well, all of a sudden, you now have some predictable recurring revenue that's very tangible, that's not rate dependent at all. That's a big deal.
That's a huge deal. There's a lot of things I think they're going to accomplish this year. And look, I think the interview is really important. That this is a company that put everything aside, whether it's a bank, whether it's a tech company, whether it's this, whether it's that, the reality is probably no other management team was able to manage their way out of an unmanageable situation from the pandemic. It actually forced SoFi to grow and expand its business. They became a much more diversified company. And I don't know that they would have gotten this big without the pandemic happening, because they probably would have focused on student loans and some other things. And this caused them to go the full financial institution route. And when you see what they are doing, the members of the litmus test, I mean, over 15 million members right now. He said at JP Morgan, he said it on us. They continue to grow. They're never declining. And I think there's a big opportunity on the horizon, because the younger generation is probably only going to want a tech-focused bank. And people like me are going to be the oddballs out. So I think there's a lot of good things coming. It's just, when does the market agree with us? When do they get into the S&P? So who knows?
All right. Yeah. Congratulations again on the interview. I'm going to sit up. My back is hurting now that I'm staying old, bro.
Are you getting old?
I am getting old, bro. It's I'm not on comfy chairs at all. It's like, it's weird, man. Like, I leave my house and I'm like, I get so used to like my little creature comforts. So anyways, let's now move into Q&A. Roy, this is for you. Why would you choose CoreWeave over Iron when you made your decision?
Because I like making money. So no, I'm just ultimately, like, I'm not anti-Iron, but I have questions, a few questions around their business. Not too many, a few around their leadership, which I haven't had good answers yet for. And then there's also crypto overhang with Iron that CoreWeave doesn't have. I don't want that crypto overhang. This is a swing position for me. I think CoreWeave is, I think Iron, I don't know if it's ahead of itself or just fairly valued. I feel like Nebius is a little ahead of itself. CoreWeave, I think, is pretty undervalued, given the backlog, given the revenue acceleration. Is debt a concern? Yeah, but that's the model that they've chosen to go with rather than dilution. So yeah, I like it. Very close relationship with NVDA too. So.
Jack is asking, saying in Ireland, we have 38% tax on unrealized gains on just ETFs every 8 years, deemed disposal. Would you invest in Amazon or Google and treat them as your ETF to avoid this annoying tax? Steve, I'll go to you for that one.
I mean, I wouldn't give anybody advice on what to do, especially when it came to tax on unrealized gains. I mean, I'm not in Ireland. I'm not exactly sure how their tax laws work. I mean, look, the reality is I think both Amazon and Alphabet are going to do very well in the future. I think Alphabet is the most complete pure play AI company you can possibly invest in. And I think that Amazon just changed the game with their supply chain logistical network that they're opening up to third parties, in addition to their 17 billion in Q1 of advertising revenues. So I think that both of them, I mean, I'm a shareholder of both, and I do have it on my plan to add to both positions, but that would just be my
thoughts on ELF at these prices. This is a Jeremy Lefebvre fave.
Yeah, I know that they had earnings this week, but I had not paid attention, so I couldn't answer you. And it's one, as far as like the quality of the stuff. There are ladies in my life. I'm married. I've got a teenage daughter as well. They like the product, but it's just not an area that I have enough exposure to or interest in, frankly. So yeah, you guys have any thoughts?
No. Do we think the Databricks IPO will have an impact on Snowflake stock? So we talked about the impact on ClickHouse, but now Snowflake.
They're toxic competitors. What's interesting though is we've seen SPACEX IPO having a tremendous impact on Rocket Lab, ASTS, and other space names too.
Positive.
Yeah. So we may see some front-running of that. I don't think it'd be as extreme because, again, like SpaceX is the gorilla in the room as far as the IPOs. But Databricks, like any normal year, Databricks might be like one of the top 3 IPOs that year. This year, it may not be.
Tevis, do you like working at a startup better than an established company? There's trade-offs. I would say a startup, you're definitely going to do way more work. You're going to wear way more hats. And it's a fast track to burnout, I think. Whereas an established company, like, dude, I see a day in the life of these Google and Microsoft employees, and it's just like a resort almost, where they work 4 hours a day and they have all of these extra benefits. So I would say a startup is more rewarding because you get to impact more change and wear more hats and actually see the impact of your results or the result of your efforts. But it's also way more difficult than an established company, because in an established company, you're one cog in a huge machine, versus in a startup, like I've unilaterally made decisions that can change the trajectory of the business for better or worse. And that's pressure. Carl asked, when is he going to do, and this is for you, Steve, I'm guessing, and Amit, when is he going to do a carp and start cussing out the shorts? Or maybe Anthony Noto, I think.
I don't know. Even if I knew, I wouldn't say anything, but I don't know.
That's fair. I think it's sooner rather than later, because with his frustration being where it is, I'm not surprised. Rob is asking, is Noto not bullish enough on the MasterCard profitability? If all their transactions run through SoFi USD, how is that not insane profit, more than 100 million, like he said?
I mean, I would say go listen to it again. He was pretty damn bullish on it.
I think he's too bullish, actually. That's one where I have a pretty good understanding of payments. Look back, do any LLM and just ask what the stablecoin and crypto partnerships that MasterCard has announced in the last couple of years, and there's a bunch. SoFi is one of several. Is it accretive? Yes. But the unit economics, or the way that they're doing the SoFi USD2, is that the holder is actually the one that's receiving the bulk of the yield. SoFi does get a small cut of that spread. So it's not, in his comment on like all the transactions, is not MasterCard doing all their transactions. I don't think Noto or anybody should expect that. That would be, it's not happening. I'll just put it that way. But is SoFi internally and also with their tech platform doing all the transactions on SoFi USD? That's actually, I think, a bigger deal, much bigger deal than MasterCard.
Yeah, I just know the sirens are Steve's background, but
they're coming for me.
They're coming for you. Roy, what about FIGR? I mean, we did a whole segment on FIGR, which you can go back to. That's at the 57-minute mark is the segment on.
More bullish. There's only one piece in FIGR that I was slightly less bullish on, but I'll like Steve, I think I'm going to do inside the thought processes and what happened afterwards. I'll save that one.
All right, you almost kind of have to.
Yeah.
Let's talk about this. Did you hear him say he believes SoFi could be a $1 trillion company? Steve, let's start with you. What did you think when he said that?
No, I missed it.
I said, what did you think? I know you didn't miss it, Steven.
How many banks are there that's $1 trillion company?
None.
One.
JP Morgan will get there.
They float in and out of $1 trillion. I think the next biggest one is Bank of America, and then Wells and Citigroup. A lot of things have to go right. Now, you notice how, and I'm not going to put words in his mouth, obviously. I think that if anybody believes he is talking about a 12-month or 24-month period, I would say my opinion is that's not what he was saying. I think he is talking about much further down the road. But this is what I will say. If we are talking 10 or 20 years, I don't see why it can't happen. And here's my logic behind it. We now have 8 companies that are over $1 trillion market cap, or 9 companies that are over $1 trillion market cap. At some point, we will have the first $10 trillion company. And at some point, we will have the first $20 trillion company. Whether that's in the next 5 or 10 years is debatable. Now, as that happens, you would have to think that there are more companies that become $1 trillion companies. And if you have multiple companies that are 10 to 20 trillion, you have to think that overall the S&P is increasing their EPS and the financial system is going to increase. I would think that SoFi is in a very good position for the next decade because they should get a very large segment of the wealth transfer as younger people need banking and get assets passed on to them. And on the trajectory that they've been able to deploy and implement products, I don't see why they can't become $100 billion company sooner than later and work their way into that $500 billion to $1 trillion over the next decade or so.
Yeah, I think that's very fair. Like, I mean, look, if you extrapolate 15 years out, $1 trillion valuation, you're basically considered a mid cap at that point because of inflation and the amount of money that's going to get pumped into the economy over time, right? So, like, that makes perfect sense. Roy, any thoughts on this?
Yeah, I guess I'll be the SoFi bear on this one. I'll say no, unless you're talking about a very long time out, like 30 years. Sure, maybe, like, because inflation, market cap creep, and all that stuff. Half of that, which is phenomenal upside in the next 10 to 20 years.
I think we lost Roy.
Yeah, the SoFi gods didn't like what he was saying.
Yeah, seriously. It's just SoFi's PR team watching this just cut his internet.
That'd be pretty funny.
All right, well, that's Houston for you. Don't live in Houston, guys. Let's see if Roy actually drops off and then connects through his Tesla or something.
I mean, what did you think about what he said, Tevis? I mean, we haven't really talked. I mean, obviously, I know your take on the Leafs, but I mean, what do you think about what he just said in general throughout the interview?
I mean, look, I think he was incredibly optimistic. I think, $1 trillion is difficult to comprehend, but of course, he's looking at it like a decade plus out. He doesn't want to leave the CEO job anytime soon. And I think he's going to be healthy enough to do it. I mean, he's only 58, right? So,
dude, he does not look like he's 58. I will tell you that right now. Dude,
in the photo you guys took, he just completely dominated that photo. He looks like he's built as an NFL player.
I mean, he played for West Point.
Yeah, no, that's what I'm saying. He looks the part.
Like I didn't realize how big of a guy he is.
Yeah, he's like 6'2", no?
He's a big dude.
Yeah. Yeah. So I think it's, like I said, I think it's the most candid we've ever seen Anthony Noto.
Yeah.
And to have 5 kids on top of that, geez, man. Guy must be busier than all of us with 5 kids and running a publicly traded, $20 billion company.
Yeah, I don't know, man. I don't know. I don't know how he has the time to do everything, but yeah, he was great. I mean, I know you guys interviewed him. I mean, you can say what you want. I mean, I think that he was the same way when he walked in, same way when he walked out, same way when the camera was not rolling. Like, he's just that guy.
Yeah. I was just telling Roy, like, before he hopped on, like, it's a different, look and feel to do it in person. The form factor is completely different. It's a whole completely different ball game. And yeah, I think the interview was very, very well done.
Thank you.
Matt says Steve is 6'1", so Noto must be 6'4". I agree. Yeah.
Very funny.
Does he have an older daughter yeah, he was saying like his eldest is like low 30s.
Early 30s, and then his next one is in their upper 20s.
Hey, man, I could be a great addition to that family. We'll see. Thank you, Big Rudy, for the $2. Imagine writing covered calls on 12 million shares. That'll pay for your next vacation, that's for sure. And thank you, Deep Cheeks, for the $2. I get a small cut of all that spread too, Dr. Roy. I'm assuming he means some SoFi USD. I can't remember what we were talking about. Shall we continue with the questions until Roy gets back?
I have legitimately 5 minutes, so you can ask me whatever I want. I have an eye doctor appointment I have to go to.
It's you, man. You just middle of the day. I guess it's Saturday, so
It is Saturday.
Warsh is there to make sure that there's going to be no hikes. Steve, what do you think now that we have Warsh officially in seat? I mean, there's an argument to be made that if a hike is the first thing that he does, Trump is going to go apeshit on his ass. Are you thinking we're getting a cut this year? Like, what's your whole take?
I mean, people are going to disagree with me.
Mm-hmm.
All right. Here's my entire thought process. And I will change this on July 5th if it does not go the way I think it's going to go. As of now, I think we're going to get a deal between now and July 4th. If we do not get a deal, that will be very bad. Now, if we do, I think the strait opens up and we get oil under 80 within a week. I do not think oil goes under 70 anytime soon, though. We saw oil go from 104 to 89 when it looked like we were getting a deal. So if we actually get a deal and the strait opens up and you get 20% more oil on the market, I do think within a week we get oil under 80. I think over the next 2 to 3 months after that happens, CPI and PPI will start to decline. They go into Jackson Hole. They come out with a consensus to start cutting in September.
Yeah.
If you do not get a deal before July 4th, you will not have any reports of CPI and PPI cooling into Jackson Hole. And I do not think Warsh will be able to convince the majority of the board to vote for a cut. And I think that there is a halfway decent chance that we come out of Jackson Hole with a rate hike, because it doesn't matter what Warsh necessarily wants. He only gets one vote. So the question is, how loyal is everybody else to Powell? Now, I think that Powell should not be allowed to remain on the board. I think that he should be kicked off since he's staying. Right. And the reasoning for that, it's not that he isn't allowed to stay. Obviously, he's allowed to stay and finish out his term. Problem is that with him staying, how many people are more loyal to him with his alliances? And I just think his view could undermine what Warsh is going to try to do. I mean, Warsh is now the leader of the Fed. And I think that I think that with every board. I don't think that when you're on a board, like when I'm no longer president of my board, I'm not going to be on it as just a director, because anything I say, I don't want that influencing anybody. So I'm coming at it from a position of, I am currently the president of a board. Okay. There are 7 board members. When I'm no longer president, I'm leaving, because whatever I say impacts it too much. I don't want anybody just agreeing with me because they think that I know more. Right.
Yeah. You're a high integrity person, man. Powell is somebody scorned by Trump, and so that could be reflective as well.
I would like Powell to leave, but I do think that we need oil under 80. If oil doesn't go under 80, you don't get CPI and PPI cooling in time to warrant a September cut. That's the big problem right now.
Right.
I still think there's time, and I still think we get cuts this year, but that clock is really ticking right now.
Yeah, I think that makes sense. How long do you think Powell will stay on? George is asking.
I think he's going to stay on to his term ends. His term ends in what, 1.5, 2 years?
Yeah, I think 2027.
I think he's staying on the whole time as a fuck you to Trump. I mean, what else does he have to do with his life?
I'm sure. Play golf, retire. I don't know. But yeah, it's hard to give up that power, I guess.
No, it's not even the power. I mean, the guy's retired. He's not going to get another job. You know what I mean? Like,
oh, but yeah. I get it. Let's see. Maybe one more question, and then we'll let you go. Let's see. I want to get a good one for you here. Well, actually, let me ask a couple of questions that people had about the interview. So here, Steve, if he can disclose, did they have to provide the questions to SoFi for Noto in advance for their relations team to review?
I have no idea.
No. Did you send questions to their PR team before Noto jumped on for them to review the questions?
No, I heard and I understood. I have no idea. I don't handle that.
Okay, you had the questions you were going to ask him before the tape started rolling, right?
All I'm saying is Amit has an assistant.
Yeah.
His assistant handles all the logistics, and I don't know if anything was sent or not. I have no idea.
But you didn't send your questions to his assistant.
I can't say. I can't say. I have no idea. Like Amit and I spoke about what we wanted to ask, what happened from when we knew he was coming on to then. I have no idea. I'm not part of the process.
Got it. Cool. That makes sense. All right. Let's see. Do you have any thoughts on ServiceNow? It seems like it's picking up momentum.
Yeah, it's picking up momentum as people realize that the people that are making noise are fucking stupid.
Yeah. Sorry, buying, selling, like where you stand with this? Just sidelines?
No, I mean, listen, I made money buying and selling it. That's one of the things I've been active in buying and selling on when it goes up and when it goes down as swing trades. But I mean, the reality is most people are fucking stupid and they don't understand what goes into these SaaS. And I know that you know this because this is the industry that you're in. Most of these agreements are 3 to 5 years.
Yeah.
Most of the way that these contracts are written, and take it from somebody who is the one that negotiated the damn contracts, okay? If you exit the contract, you still have to pay the duration of the contract. There is no 30-day written notice with this shit. Not to mention, when it comes to these contracts, you can't just unload all of your stuff in 30 days and move to a new platform. It doesn't work like that. Implementations are incredible. Sometimes you need consultants. The whole SaaS apocalypse is overdone. The way people should be looking at this, in my opinion, is single point software companies are fucked. Now, enterprise software companies have a huge moat around them because when you start talking about these types of platforms, large companies get audited all the time. You need, for IT auditors, the software companies that you are using to provide a SOC 2 report. Anybody who doesn't know what a SOC 2 report should go look and read what a SOC 2 report is. And then go to Workday's website or ServiceNow's website or Salesforce's website and look at how much literature on their developer page they have about all these reports. You then need third-party assessments. You need these signed off by CISOs. Like, there's so much stuff from a security standpoint that people just don't understand. Johnny and Victor in IT are not vibe coding some platform you're going to put all your stuff in from ServiceNow. It's just not happening. So I'm just saying that the smaller companies that are single point, I think, are screwed. I think companies like a Workday, like a ServiceNow, like a Salesforce, I think they're fine. That's my own opinion, but I've seen a lot of stuff on the back end that I'll tell you probably 0.00001% of people on X have actually seen. Because I'm the one that negotiated the contracts and redlined them and negotiated them.
Yeah, I think that's very fair. I think the whole like SaaS is dead narrative has led to some great deals on companies that will be fine. And time will tell.
What are we going to say? Oh, Salesforce that does $14.5 billion in free cash flow, they're going to sit here on their hands and not use the same models or better models that these other companies don't have access to improve their product? Like, are people stupid?
As like, you said,
do people really believe that if I have access to Opus 4.7, that Benioff doesn't have access to a better model? Like, I mean, seriously.
It's a fair point.
I mean, or how about this? Do people really think that I have a bigger token budget than Benioff?
That one I don't know. Okay, you are. You could. But yeah, I don't think it's so simplistic as okay, everybody's going to vibe code away ServiceNow or any of these other SaaS companies. So if it's not going to zero, then where is it going? Like what I think with the ServiceNow rally is that it was largely part of a rotation, right? You're going to have the AI names selling off, and you're going to have the SaaS names catching a bid, and it's the same capital that's moving from one to another. It's just the market and the hedge funds and the institutions are like rotating to hedge risk appropriately. So I don't know where the actual valuation will land, but if you believe that it's not going to zero, then this is a pretty great risk reward to pick it up at.
Yeah, and let me be very clear. I do not know if they're going to zero or not. I have no clue. I just know what I see in the contracts, and I know how the deals are structured, and I know what business. Let me rephrase it like this. I know what happens on the back end of business that everybody who's screaming, I don't like the product, aren't even involved in that process. So I'm coming at it from a much different aspect. The market is obviously thinks I'm wrong. So we'll see. But I think it's very hard to vibe code away a moat of huge amounts of free cash flow. And I would challenge everybody to think about ServiceNow specifically, because that was the question, as why wouldn't that become the tower that manages all of your AI? So
yeah,
I have to run though. I apologize.
Let me ask you one very quick 20-second last question. Yep. How do you think Noto felt having to stare at that Robinhood sticker on his laptop the entire interview?
I don't think he cared.
Okay, go, Steve. Thank you for being here.
Why would he care? I mean, why would he care?
No, I'm just. It was like the top comment on the podcast, so it was kind of funny.
Anyway, oh, Roy just texted me his power went out.
Yeah, no, I'm not surprised. This has happened before. This is what I got to deal with on this. Like, watch, he's gonna join from his Tesla sooner or later. Any minute now.
All right, everyone,
for being here,
guys. I'm not lying to you. I am not involved in that side of it. You have to understand something. If you think I'm sitting there editing and dealing with logistics, I'm not. I'm just a guy that shows up and I do what I'm told. I show up on time, and what happens on the back end, that's kind of why Amit has an assistant. So I really can't answer it. I'm not lying. I'm not being disrespectful. I'm not shying away from it. Like, I legitimately have no fucking clue.
You're a good little worker bee, bro.
So, anyway, I will see you later.
Thanks, buddy. See ya.
Later.
All right. Well, there you have it. Just me now. What I can tell you is when I interviewed Noto along with Tanner, we did not pre-vet the questions. We, in fact, asked the PR team, and they were like, nope, you could just ask whatever you want. And we gave them the offer after we did the interview for them to have a cut. Like, we had a producer from their side sit backstage, like somebody on their comms team, and they viewed it live, sitting backstage as we recorded. And then when we finished the interview, we pulled them back onto the stage and we were like, hey, like, was there anything there that you want us to cut? And he's like, nope, good to go. And what you saw in the interview that Tanner and I did in February is basically what went out. No questions were pre-screened by the team and no parts were cut. SoFi just was like, ask us anything and we're good to go. So I'm not sure how it worked with Steve and Amit. I don't know, but that's just a little bit of my experience of how it worked with myself and Tanner. They were super open to complete flexibility around what we could or could not dive into. Yeah. All right, let's see if I can answer a couple of questions for you. We'll give Roy about 5 minutes to come back, and if he doesn't, then I will wrap up the stream. It's already over 2 hours on the stream, and I was supposed to wrap up 15 minutes ago. But I'll take a couple of extra questions from you guys, and then go from there. Thoughts on Jeremy? I mean, I like Jeremy. I think he's an OG of the YouTube space. I don't always agree with his picks, but I always will hear his rationale on some of the companies. I mean, Jeremy really blew up with Tesla back in 2020. And I mean, he's had some good picks. I mean, he went to Palantir. Meta has been great for him. He's also had some, crappier picks, but that's everybody. Nobody has, nobody bets 1,000. But largely a fan. Have you guys looked at how institutions are accumulating this quarter? UBS doubled their position in Q1. Yeah, it's a big deal, and I think we should be paying attention to what happens behind the scenes with a lot of these companies as institutions. I mean, I'm not sure. I'm assuming this is SoFi, but also BM&R has seen a big jump in institutional activity. Nebius the same as well. Institutions are loading up right now while retail is maybe selling or taking gains, or maybe panic selling if it was back in February. It's just the way of the world. Dude, he does this to me all the time. This is why I can't be in a relationship, because you'll get abandoned to however many there are of you. 400 people here. And Roy's like, nope, sorry, you can talk on your own. But it's fine. His internet is like surprisingly bad. Like, there's this perception you have of America as an outsider looking in. You're like, oh wow, like the US is like cream of the crop. And then the more streams I do with Roy, I'm like, dude, these guys can't even have stable internet. Like, what the hell is going on in this country? This is a shit show. So speaking of the devil, there he is. What's going on, buddy?
I'm alive.
I was
Houston
just
power
telling
grid, man.
people, yeah, you guys can't even have internet, right?
Third world city, I guess.
Yeah, exactly. Exactly. Maybe let's do a couple of other questions, Roy. We're already at 2 hours and 16 minutes here. Maybe let's, go for another 5 to 10 minutes, and then we can wrap.
Sure.
Yeah. All right. Let's. Texas has not updated its power grids. Texas third world. Hey man, they let you shoot guns and wear a cowboy hat, and in my book, that's worth a little bit of spotty internet. Okay. Let's move on. Super bullish on SoFi long term. Staying away from SPACEX. Do you guys have any thoughts about small modular nuclear power? I'm starting DD on SMR. Haven't heard about them, but let me know what you find in the DD, and that could be an interesting one for sure.
So it's more of, maybe there's a company that's actually named that, but like that's the trend. Instead of building huge reactors that power entire cities, you have SMRs, which are intensive as far as capital expenditure, a much smaller environmental footprint. I think it's a great opportunity. I mean, like, I'm bullish on energy in general just because of the data center. So yeah, it is a ticker. But
wouldn't wheeling SoFi make about the same profit as Leaps? No, because the premiums on SoFi are not great, and if this thing runs, it's going to run in a big, maybe double or triple. In which case, the Leaps would make a lot of money. Isn't FIGR a crypto company? Yes, they are. Real estate, property tech / crypto. Do you guys look at any of the AI landlords that were BTC miners? I really like Hut 8, especially after they got the AAA bond financing.
I prefer a pure AI play rather than the transition. I'm not saying that they're not going to make it, but yeah.
Agreed.
Complicated.
Yeah, exactly. Roy has $350 NVIDIA Leaps.
Leap, singular.
Leaps ? Soon to come. TBD. Stay tuned.
If we retrace to 200 or below, I'll definitely make that a plural. So
yeah. All right. What's the swing play for SpaceX IPO? Buy and sell before the IPO, or buy before and sell after the IPO, or not touching it at all? I'm not touching it at all personally, and I'm happy to potentially leave some money on the table by not doing that. But I think there's just high risk associated with SpaceX itself.
Yeah, I'm not. I might, like I said, be allocated a few shares in an IPO, and I'll be okay with that. And I'll probably sell them 1 month out and not take the penalty. If you sell them within the first 30 days, depends on the brokerage. They don't like that, and you might be boxed out of future IPOs. So I would rather not do that. In fact, I might just do it on SoFi because I don't really care if I get boxed out there of IPOs as much. But yeah, I think that there's better opportunities elsewhere.
Thoughts on when crypto starts to recover? I would say end of summer, beginning of fall.
September.
Everyone hates on BMNR, yet everyone seems bullish on MicroStrategy, who's also underperforming. Any thoughts? I mean, no. I don't know who's bullish on MicroStrategy, but like that thing's been a dog as well.
Yeah, they're in the same bucket. I mean, obviously different Bitcoin and Ethereum, but yeah.
I feel no one is talking about CrowdStrike, but it's up 80% from this year's lows. Any reason you guys can think of?
Yeah, so it's in SaaS. All these cybersecurity names are, and the market, when it goes against whatever bucket or basket, it shoots first every single thing, and then asks questions later. And the benefit is, if you wanted one of these names, that you're like, hey, why are they saying AI disruption is going to kill cybersecurity? Makes no sense at all. You know, Anthropic had that little thing that they launched. I'm not saying it's little, but it's very cool. But the reality is, like, they've done a better job of illustrating the extreme and pressing need for very good cybersecurity names than anything. And CrowdStrike, of course, is high quality. So yeah, it's simple as that.
Yep. All right. How do you get in any neoclouds at these price points? Keep selling cash secured puts until it's good enough to. Yeah, look, I think if you have the patience, you can't go wrong. If you want to get in anyways at these price points, can't go wrong selling cash secured puts, man. Like, you'll get paid to wait, essentially, if you don't get hit. Now, the only thing that you can go wrong on is if these continue to run up, then you're consistently raising where you're selling cash secured puts at, and you might get some FOMO. But ultimately, like, it's from what it sounds like in your question is, if Nebius were to fall, say, to 150 and all of a sudden you get hit, you'd be probably happy with that scenario because you want to get in anyways. So if you have the patience for it, cash secured puts is a nice hefty way to make some money. Roy, did you ever look at Kraken Robotics?
Yeah, it's an OTC play, so I tend to not do those. It's interesting, but there's a lot of other, like, I'll keep an eye on it and just see how it plays out. Solar stocks, yes, it's not just Enphase. I did actually look up because I saw the question. SolarEdge is up 97% year to date. Now, I don't follow SolarEdge that closely. Enphase, part of it too is they've launched last year a commercial product. Previously, they didn't really have a commercial line. And then they've also announced a product that is in extreme demand and a solid state inverter specifically on data centers. So, and then I've always thought going into midterms that the overhang against solar, which is always silly, and it's because of regulation and also rates, would begin to dissipate, and it seems like that's ahead of schedule, actually.
Mm-hmm. Okay. How do you go about finding really juicy but realistic premiums? I mean, the more volatile the underlying name is, the more volatile the premiums are going to be, generally speaking, because there's more sort of like uncertainty that's baked in, and both sides think they're going to have a winning trade, and both sides are buying, so the IV gets jacked up. I would say, like, first look for a company that you want to own. So the way that I do it is, like, first I look for soundness on the fundamental level and the thesis to be intact from a growth story perspective. And then from there, I look at what the premiums are. Don't go chasing premiums on shit companies, because you will be left holding a bag at some point or another.
Absolutely. Yeah.
Speaking of, and what's most bullish for you over the next 3 months?
NVIDIA.
Okay. All right. Say less.
Well, I said I think it's going to go on a good run to 300. So, yeah, we're at 215. It's not high, very good reward. I think it's a great setup. So yeah, I tend to not like invest according to over the next 3 months. I think it'll do the longer term horizons. And if it happens sooner than I expect, there, I think.
Yep. Yeah, Roy, 100% NVIDIA. Why not? Are we watching? Oh, man, next 3 months, I still like Nebius. Honestly, here, I think it's going to continue to do well. So we'll see where it goes, but I like it.
Yeah, CoreWeave would be my number 2 answer for like similar reasons as Nebius. I mean, same factors here. So
the fact that you guys, both you and Tanner, are now CoreWeave stands, I'm like, ugh, get out of my sight, you traders.
I have not talked to him, and I need to at some point. But I did see what he and Steve were talking about. It's really funny because we hadn't talked to each other, and just independently, we started looking into that. I still like Nebius better. I just don't really like the price. So,
yeah. Let's see. What question do we have? Oh, are we watching Enhanced Games tomorrow? They'll be on YouTube. Is this like where they get people that are roided up to like race each other? That's like the most dystopic, like Black Mirror-esque type of thing. I'm so there for it. Probably not going to watch it. But it's
I don't know what those are.
Crazy time to be alive. Let's put it that way.
Yeah.
What else? I don't want to answer all these questions because that'll take way too long.
Pull up the BM&R one. Xiaomi J5M. So
can you tell me about
he says,
BM&R? Yeah.
Can you tell me about BM&R in their case? I'm considering investing in it, but I'm afraid that Ethereum will be dead in another year, and then I miss out on other things like AI. If you think Ethereum is dead, BM&R is going to zero, and you should probably short it.
Yeah.
So don't invest in something you think is going to die in a year, even if you think it might go up in the meantime. Don't do that.
Yeah. I'll answer that. I wasn't going to answer this, but he asked again. So covered call, basically you own the shares and you're agreeing to sell at a price that's higher than what you presumably have the shares at. So if I buy 100 shares at $10, I agree to sell 100 shares at $12. And for that, I get paid a small premium. Cash secured puts is the opposite. You agree to buy at a certain price and you have the cash as collateral and you get paid a premium for agreeing to buy it at a certain price. So realistically, how you run the wheel is, let's say your stock is at $10, you sell a covered call for $12, and if that gets hit, then you take the proceeds, the profits from that, and then you sell a cash secured put for like $9. And then if that gets hit, you get the shares back, you give up the cash, and then you go ahead and sell another covered call at like $12 again. And that consistently gets recycled and you're collecting money all throughout that. So that's how it works. Obviously, a little oversimplified, but do some homework on it. It's a really powerful weapon at your disposal to make money. George asks, thoughts on the potential eBay acquisition? I never thought it was going to be serious, George. It was kind of a joke all along. It's a PR publicity.
I think Ryan Cohen did it mostly for optics. I mean, like if it worked, great, that's awesome. But yeah, there's other reasons why he's doing that. And obviously, we were skeptical all along on it, even like being beneficial to shareholders. Like obviously, eBay is a solid business, but yeah, and like not all of what he said in those interviews was unreasonable as far as how they could leverage this. And he is known as a cost cutter previously with Chewy, but yeah, it's not going to go through. eBay pretty much said this is a mysterious offer.
Yeah. What's the risk of covered calls and cash secured puts is like you're making a fixed, price agreement. So like in our example, we're selling it at $12, but like that stock can go from 10 to 20 and you missed out on $8 worth of gains because you're forced to sell it at 12 instead of 20, right? So that's the risk. It's opportunity cost or money that you would otherwise leave on the table. And for that risk, you're collecting a small premium because if it does hit that price, you sell it at that price, but if it doesn't, then you still keep the premium. So there is always there's no such thing as a free lunch. So understand it fully before you start to dip your toes in. Jer says, my Nebius, this is a perfect example, by the way. My Nebius $200 covered calls for January 2027 are cooked. That's what Tevis is saying. That is absolutely what I'm saying. Those are cooked like capital C, capital O, capital K, capital I, capital N, capital G. Cooking. I don't know why I spelled cooking, but cooked is what I was trying to spell. Those are freaking toast. Yeah, because Nebius is going to be much higher than $200 by that time, and Jer is going to miss out on the profits there. All right, let's see what else. maybe we wrap up there, Roy, unless you have anything else that's like a burning question. Bring up.
Let's do the what are we thinking about Hood, and that'll be the last question. So
Yeah, sure. I can't believe I misspelled cookie.
So Robinhood, I think, is caught up in the same thing as pretty much every fintech and every other crypto name too. That's good. They're cyclical. They're not as cyclical as they were in the past. They're building a lot of very good things. They're still growing very well. International is a huge opportunity. Prediction markets, the Rothera that they're launching, huge opportunity. Trump accounts, huge opportunity. There's a number of these. Robinhood Chain, which is a little bit further away. I do think that there's a couple of things that they're focusing on, like Robinhood Social, which are not really the best focus and use of their brain space. Could I be wrong? Sure. And I do think the same factor as like FIGR and also SoFi is going to overhang these guys until that fourth quarter when we see an easing in the crypto winter, that we see the beginning of the next crypto run. Their stock has been moving in tandem with Bitcoin. So yeah, bullish, very, very bullish long term. All I own is shares. If I see Robinhood at $60 and below, I'll start adding leaps, and I have no options right now.
Yeah. Yeah, please send me your cookbook. All right. There's nothing else here that I'm like, oh, I definitely want to answer this question. Trump's about to make deal. Beans Jeans 1 says. So we'll see if that does happen. But until that time, I don't know if we're going to stream on Monday because it is right now. Okay. I don't know if we're going to stream on Monday because it's Memorial Day, but maybe we stream on Tuesday. We will let you guys know. Generally, we try to stick to Mondays and Fridays, but obviously this Friday, we pushed it back. And then on Monday, we might push it back again. BM&R question mark. My BM&R video is coming out in an hour and a half at 6 p.m. Eastern. Comes out every Saturday. Put out a SoFi video this morning, so I didn't want to schedule it too close to that. Thank you, everybody, so much for watching and supporting both channels, and really appreciate your time. Thank you for spending it with us on a Saturday. These are some of my most fun streams that I'm having with you guys here, so really appreciate that. We will catch you on either Monday or Tuesday. We don't know yet. Probably Tuesday, realistically speaking. We will let you know. But until that time, see ya.
Later, guys.